All right, how's it going, everybody? Four stocks in today's CEO barbecue. That'd be uranium, lithium, gold, silver, and a bit of copper, hopefully. ResourceTalks.com is a place to be if you want to forward your own questions to these companies that I interview each week. And as always, my name is still Antonio, the internet's very own aspiring grill master. And as always, I would be delighted for you to know that here at Resource Talks, we don't hate you. And therefore, you should know that I have no idea what I'm doing. I've never made any serious money in this space, and I should not be considered any type of authority here. So don't ask me about my picks. Don't ask me about what I think about your favorite moose patron. Don't get mad at me when I tell you that I don't really know, because I really don't know. Although none of these companies that you'll see today have paid me to include them in this week's barbecue, and although tens of minutes of research might have gone into this, and although I don't share the questions up front, nor do I give the companies editing rights, you should still be skeptical of everything that you see in here today. These are all going to be general and impersonal conversations between two talking heads on the internet, so it only makes sense for you to approach this with caution. And if you don't like losing money, you should also head over to setterplus.ca, where you're going to find the company's official filings, and you want to put them in a syringe and drink them or do whatever you want with those filings, and then talk to a professional investment advisor before taking your own decision in the end, because the mineral exploration, development, and mining industry is an overall risky space to deploy capital in, and you want to approach it with caution. Obviously, forward-looking statements, yada, yada, yada. There's something on your screen right now. I want you to read it. You have to read it. Otherwise, again, you're going to lose your money. But I'm not going to make the people wait any longer, and I'll be kicking it off here by traveling to Canada and the US, where I'll be looking for lithium first and then maybe cobalt by talking to Jonathan Buick, president and CEO of Champion Electric Metals. The company's listed on a CSE under the ticker symbol lithium, so that'd be LTHM, where an average of about 800,000 shares trade each day with a 52-week high of 20 cents and a 52-week low of 4.5 cents. With a market cap of about $16 million and about 250 million shares outstanding today, this is a 6-cent stock. So not atypical and not too far off from that 52-week low. I see 58.8 million warrants striking between 10 and 25 cents and 19.8 million options striking between 5 and 30 cents, bringing the number of fully diluted shares to 335 million, about a third of which actually, so let's call it 30%, is owned by management and insiders. As of the last interim financial statement, which is dated September 30, the company had about $4.8 million in current assets, about 4.1 of which in actual cash, supplemented by $700,000 of accounts receivables and prepaid expenses. The short-term account payables of about $700,000 are what makes up the majority of the current liabilities, and there's also no long-term debt. That same financial statement tells me that running this company cost on average over that last 3-month period about $100,000 per month being spent on stuff like marketing, travel, management fees, and so on and so forth, while exploration and property acquisition cost for that period a total of roughly $900,000 a month. Rather a lot, but that's going to make sense here in a second when we get to it. That's an exploration to G&A ratio of about 0.1, which means that G&A represented about 10% of the overall cost here. And remember, this is only a snapshot of a 3-month period, so you're going to have to go to the company's website, look at when or what they're drilling. You're also going to have to go to setterplus.ca to look at the most up-to-date numbers and its official news releases, because, again, non-revenue generating company, but spending money on drilling right now, so you have to pay attention to that. Boring stuff aside, though, there are multiple projects there. I believe I said there's 2 projects at the beginning, but there are actually more than 2, which is something I hope we can touch upon. The main focus here, though, really is Canada. It's the Champion Electric project in the James Bay territory in Quebec, Canada. I believe there's no fixed name for it, but we can talk about it later on. This is a large piece of land, so it's about 530 square kilometers, or 1,700 iPhone lengths, or whatever Americans measure distance in, I don't know. And more importantly, this project is located close to Patriot's Corvette property and Winsome's Scansett property. And even more importantly, this project lies on the northern extension of the Lac Guillier greenstone belts, which is the same greenstone belt that hosts that Corvette discovery. This is early stage exploration, and in 2023, Champion walked the bush, doing all very much not boring stuff at all, like X-rays and lidars and aerial photography, which was all then followed up by more interesting stuff like till sampling and gravity survey. And all of that has resulted in 3 targets being selected for LCT exploration. And that LCT, by the way, stands for lithium, cesium, and tantalum pegmatites, the stuff that dreams could be made of in the lithium world. A maiden drill program on those targets was announced on March 20, so not too long ago. And then the most recent news release from April 9 says that they've hit about 19 meters of spodumene-bearing pegmatites from 7 meters of depth to about 26 meters downhole, and that's after 6 meters of overburden. There's no clear indication on how those pegmatites are oriented or how big they are, neither whether there's any high grade in them yet, because the assays, the results that they have here, the rocks they have here are being rushed to the assay lab as we speak. But this is definitely a start, and hopefully I'll learn more about that later on in the conversation. As I said, lithium is not the only thing the Champion is chasing here. They actually changed their name from Idaho Champion to Champion Electric when they picked up this property, and it was called Idaho Champion before, not because they enjoyed finger steaks, huckleberries, and hot springs, although I'm sure they did, but because they just like huckleberries and hot springs. The company was also Idaho focused. Idaho is still an important part of the story here because that's where the Idaho Cobalt project is. Although maybe a little bit on the back burner here, this is a large land claim as well. It's actually 4 of them. There's 4 projects covering almost 7,000 hectares in northern Idaho. That would be, again, not in a strange neighborhood because the Jervois, well, whatever you want to call it, Jervois has their construction-ready ICO project close to these claims blocks here in Idaho. And I think I might lose my European card if I say Idaho one more time. So I'll move away from Idaho. Oh, there you go. And then into the conversation. Oh, before that, in addition, as I said, company owns other projects. So there's the Banner Gold project also in Idaho County, and the Champagne Polymetallic project in Butte County near Arco. So again, plenty to talk about here. But before any of that, Jonathan, I want to talk about this new pegmatite discovery here, obviously. What does it, I want to understand how you made it basically and understand what it corresponded to with from all the previous work that you did, as in the geophysics, the till sampling, the geochem, and all that. What's the main driver behind the discovery here?
Sure. First, thank you, Antonio, for allowing me to come on and participate in your podcast. So thank you for that opportunity. So last year was an instrumental and monumental year for us as a company. We completed our last acquisition in the James Bay. So it was the last of 9 acquisitions in May of last year. And then we immediately went into the field, and then the forest fires came and we got to evacuate. So we moved to a lot of airborne programs while before we actually had boots on the ground. And then as soon as we went back in, we had a sampling program and mapping program with our team. We had 15 techs and geos in the field from August through to the end of October last year. And with where we are, there was glacier movement historically. And so we had some overburden across a big part of the property, and we had some exposed outcrop or pegmatites. Overburden is the earth that gets moved with the glacial movement. So it's basically scrapes across and picks up, and then as it recedes in the melt, it'll drop that earth that is gathered along in the path. And so we had probably about 25% of our property had exposed outcrop, and the rest was covered by either bodies of water or overburden. So one of the tools that we know has been successful has been till sampling. So in a till sampling program, you go in and on a grid pattern, you take about 10 kilos at a time, and then you do a separation to see what the minerals are there. So we added that into the mix late in the fall to try to make up time for having lost 11 weeks with the fires, and immediately saw and had a couple of lithium boulders discovered, as well as a bunch of lithium crystals. So we know that the source was in nearby location. I'm blessed as a part of our technical team. I have a geophysicist. His name is Regis Neroni, who at one time worked with Fortescue in Australia, was responsible and part of their non-ferrous teams, and was a part of the teams that made the lithium discoveries in the WA. He then left, created his own consulting firm, and worked with Winsome. And Winsome, who is our next door neighbor at CanSet in James Bay, but also the Adena discovery, which they just delivered their first resource, also in the James Bay. Regis was a part of their success in the technical approach to those discoveries as well. So we're fortunate. Patrick Highsmith, who sits on my board, was working with Fortescue while he was on my board, or actually he had just left Fortescue to come back, and he joined my board after that. And I can tell you why and how I know Patrick, but at this stage, let's tie him into Regis. So as we were moving into the James Bay and looking to add and complement our skill sets, I reached out to Patrick, said, look, is there anybody you think would be somebody that we could draw their expertise on? Because Australia has about a decade of a head start on Canada in terms of lithium exploration and development. And so I think that for us to try to take advantage of that, 10-year IP gained by the technical people would be foolish. And so we wanted to shorten our learning curve. And my board has lots of lithium experience, but certainly bring in additional lithium experience. And so Regis joined us and had been a part of presenting a paper at PDAC 2023 on the use of gravity and mag for undercover pegmatites. Because most of the time, lithium is abundant and it's been cheap historically. So people never really looked for it. It would just literally walk across exposed outcrops, similar to what happened with the Corvette. That was an outcrop. They were looking for copper and gold at the Corvette and kept walking over these pegmatites. They sampled them now, and sure enough, they end up with a top 5 global resource in the lithium. We weren't so fortunate to have a big outcrop sticking out. So we were using other tools to de-risk the project for the shareholder. And so with the till sampling coming back, showing us that we had a source nearby and up ice within our property, we added a gravity program this winter. In January, February of this year, we did a gravity program and came out with a really nice gravity low. And it was on the southwest corner of our property. And we tied that in with the tills and the mapping, and realized that there's a real reason to come in and get the drill turning immediately. So we announced the drill program in March, and on April 9th, as you said, we've announced that initial discovery hole of 19 meters, and that's been rushed to the lab, but certainly it proves our geologic thesis. And we have enough data from the programs we've done already. And mind you, this was our first ever field season last year. So we still have a lot of work to do. 530 square kilometers is a large land package. But with the success of that initial program, we anticipate at least another 5 to 6 targets that have generated similar types of data that warrant us not only coming in once the spring thaw finishes to continue drilling at that discovery, but to also go out and pursue other discoveries across our broader land package.
Right. That's a lot of iPhones, as I said at the beginning. Lots to touch upon there, stuff that we should be talking about, the targeting and all of that.
Sure.
But you mentioned your geological thesis, which I assume, given that you're in the same greenstone belt as the Corvette, is similar to how the Corvette was found. Talk to me about, if you combine all this, the gravity and everything that you just told me, and then sort of stick it to the rest of the fingerprint of the system that you're pulling out of the ground right now. What I mean, in terms of alteration, the mineral composition of the alteration, as well as the lithology, all these things. How does that compare to what was coming out of the Corvette ground during the early days there?
Sure. And that's a good question. And we're still gathering the comparisons because we don't have the complete data. We've sent on priority the core from this program to the lab, so we don't have those assays. Those assays will certainly help us even further target and pinpoint based on what we've seen, not only out of Corvette, but also with Winsome at CanSet. So in the James Bay, all of the big lithium discoveries have occurred in the greenstone belt. And so we've seen within our greenstone, the Patriot discovery at Corvette is now a top 5 global resource at well over 100 million tons and increasing by the day. They've got 11 rigs turning there and continuing to grow and expand that resource and continue their studies as they look to advance that. But you also have Winsome and the CanSet discovery, which sits on our southwest corner. Those are 2 discoveries within that same greenstone. And the geologic event that created that greenstone was one geologic event. And so we were confident coming in as we started to acquire the ground that the greenstone belt that we shared would also be a host to lithium opportunities for us as a company.
Hmm.
And so the data gathering and collection that we did was, again, about removing the risk for the investor. Our job is to be responsible to the shareholder. That's who we work for. And we as insiders are all large shareholders. The three largest shareholders of the company actually sit on the board, and that's all bought and paid for stock. So we're aligned with the shareholder. And so we want to respect the capital. So how can we make sure that we're getting maximum value out of each dollar spent? And so as we've gone in and refining our approach, but also because of the forest fires, we had time to, well, we sat there for 11 weeks on the sideline to go back and revisit the LiDAR that we flew, the airborne that we flew, the sampling that had already been completed. We just were continuing to fine tune our thought and thesis of the geologic risk, but also the reward. And certainly with the drill program being validated to drill a blind spodumene discovery at surface, gives us a great deal of confidence going forward.
Hmm. Again, we'll also touch upon the stuff that we'll be talking about there. One geologic event, one geologic source, I can see that, of course, you also have to have sort of the pathways to bring it there, meaning the structural controls that drives the distribution of these pegmatites. In your case, what do you know about them right now? I know the assays are not back yet, but do you know anything about the structural controls that you can tell me here?
So there's a direct correlation in the James Bay where you see banded iron formation.
Mhm.
And so if you look across the greenstone, you'll typically see the banded iron. And what we've learned through studying other deposits and projects, not just in the James Bay, but in other parts of the Pilbara, is that where you see the pinch and swells and twists and turns of the banded iron, that's where you've seen the rock units around that have opened and allowed for at a later date to see the geologic event that brought the pegmatites of the spodumene into those. And so if you were to look at our map, and you would see in red on the maps we have within our presentations and on our website, the banded iron formation is in a bright red, and the greenstone obviously is in green. And so you can see that without much difficulty where you could expect to see the pegmatites and then the structure it would be have been able to come in and been placed in.
Hmm. So what structural controls were then also used for determining the targets here?
Correct.
Yeah.
Correct.
Okay. That's well. I think that is very close to what PMET was doing at the time as well.
Still
I
are.
spoke to them. I
Still are.
haven't interviewed them on the channel, but I spoke to them in Switzerland, I believe, where you and I met actually. So, yes. How many you're doing assays right now? How many you're just asking for lithium, or like how many elements are you
But
asking
no,
for?
we're going to do a broad suite of
Okay.
within the assays. The reality is that in the James Bay, you see a lot of uh, uh, where you'll see a lot of gold. You'll also see the lithium, and so there are some other. Not people talk about the LCT. That you got indicator metals within the heavies and elements that show that lithium should be there, which we've done with the XRF gun, but also in the James Bay, you'll see a lot of copper and gold. But with, again, a land package of our size, we think that there is a multi-element opportunity here. Priority is lithium, but we still think there could be a gold copper situation. So we will be
Hmm.
running a full suite, at least initially, until we get a better understanding of what else is around. It makes sense for us to be testing for everything.
Have you done lithological mapping? Do you know what kind of rocks we're dealing with here?
That's ongoing, and we have been, and literally the database that we're creating right now is quite impressive.
Okay.
Um,
Well, so the upcoming news releases are going to be a lot of understanding of the region on a more factual basis, basically. So assays, the lithological mapping, and stuff like that. When do you think the assays are going to come back from the lab?
so we did a priority rush on the that initial hole, and that is the lab. Now I take everything the lab tells me with a grain of salt. So, but they've said 2 weeks. So I would expect by the third week of April to have that initial hole
2 weeks.
reported.
It's very. Is that costing you more? Like, how does that work? That's way quick.
Uh, we are paying premium for that. Yeah.
Hmm.
We're not we're not going to pay a premium for every hole, but certainly because this is the maiden program and this is a nat surface, what we believe is nat surface discovery, we think it's important to gather that information as quickly as possible because the other side of that is we are literally planning the spring and summer programs, and we need to be able to adjust different applications and permits according to what those assays look like.
Right. But so far you've drilled only one hole.
We have drilled more than that.
Okay.
That was one of the initial program. The rig is still in the field, but we are being severely impacted by the spring thaw. So we need to get the rig demobbed and out before it gets bogged down in the mud, and then we have to sit and wait. So the rig will be demobbing out here any day.
Okay. And then you also have the duck hunting season for a month.
Correct. Yeah.
Okay.
So in the territory where we are, you have a spring goose hunt, and then there's a fall moose hunt.
Okay.
Each of about 30 days where you need to be out of the field. First, we do that for our own safety of our team, but also out of respect of everybody who's involved in the hunt to make sure that they have the optimal chance of success in their endeavors as well.
Hmm.
Uh, but certainly that means no helicopters, no excavators, no drills. You don't want to be doing anything that's any type of noise or disturbance that would impact
Right.
a hunt, whether it's goose or moose.
Yeah. And you're right. It's goose. It's not duck. I said duck. I shouldn't have said that. I've definitely offended some Canadians. But that's fine, I
We,
suppose.
we hunt duck too.
Oh, okay. So you do ducks. Well, that's good for me though. Do you guys
Yeah,
already agree on what the plural is of moose, or is that not yet in the cards?
that's somebody else's challenge. I have my own set of burdens and responsibilities. I'm not taking on that
How
one.
many holes do you want to have drilled before the rig demobilizes in total?
I think the one that we're on right now, hole 10, will be the last one.
Okay, hole
Literally,
10.
we went from when we started the rig turning, it was minus 30, and right
Okay.
now it's 6. So we are literally seeing what was a nice track to be able to move the rig in and out is now turning into a major mud bath, and we just don't want to be encumbered. So we need to be getting that rig out.
Right. Releasing those assay results from the 10 holes. I suppose not all of them are going to be a priority rush for sort of 2, 3 weeks. So I suppose that's going to be the normal 6 to 8 weeks.
Correct. Yeah, and so I would expect to deliver the results for the remainder of the holes by end of May would be my expectation.
Sure.
And
Okay.
we will have boots back on the ground at the project end of May as well.
Right, right. That's May 20 that goose moose hunting season ends. And then you can get people back on. Um, okay. Are you going to be announcing them in batches or hole by hole?
That'll be dictated by how the lab provides them back to us.
Hmm.
Yeah, my
Okay.
expectations we'd be getting them in batches. I don't think
Hmm.
they're going to send us one by one.
Right.
That's been my experience. Is you'll
Right.
usually get them in a batch.
Hmm. Well, why I'm asking is because this discovery obviously changed your approach to the drill program, and you also say that the main objective has sort of become understanding how the pegmatites are oriented underground, as well as how big they might be. Um, what does that mean? So this is hole 7, I believe, 007. What is that? Is drilling going to be surrounded mostly around that, or like how do you see? I mean, yeah, how do you see the positioning of the drills?
So this first program, the way we approached that was we had a known area where we had the spodumene crystals and the boulders. So we knew the source of those was up ice, and the way the glacier had come in, it came in from the northeast down to the southwest and then receded the same way. So we know that the source of those original boulders was northeast of where we discovered those. So what we did was our drill permit had been submitted while we were doing the gravity because we had a pretty good sense of where it was. And so in ideal world, we would have waited till after we had everything to make the drill pad locations, but we had certainly good enough coverage to go and immediately put that rig in. Is we did a spaced out fence drilling. So what we're doing is every couple of 100 meters, you're drilling from the south to the north, and then there's another drill pad opposite, and then coming back. We were searching out that way to see if we could find that source, and hole 7 is when we hit that pegmatite undercover. And
Hmm.
so the next phase of drilling will be probably a little bit altered in that now we have an immediate source already. I don't know what the other holes holds, but we certainly know with this one that warrants additional drill hole coverage in that immediate area and probably to the northeast, just given what the structures look like. And in the James Bay, a lot of the structures you'll see sort of lay like that in terms of this is not in terms of at depth to surface. This is like north to northeast. They tend to run from a southwest to northeast direction. And so we're anticipating that ours would be the same. And certainly that's what it was at Kansas, and that's what it is at Patriot with Corvette. So we think that there could be clusters. And again, this program was it probably ends up being just over 2,000 meters, but our next program will be a much bigger, more robust program.
Okay.
Because not only are we going to be looking to expand on this discovery area, but we think there'll be other targets to go and pursue with the drill bit as well to see if we can seek a second or third discovery within our property area.
Okay, so average depth, what, 200 meters here, that you've
Correct.
done now.
Yeah.
How much are you paying per meter of drilling?
All in costs, probably with including lab and geos and everything's probably about $400 a meter.
Okay. So,
400
right.
Canadian meter.
Canadian. Okay. So that's less than $1 million, $800,000.
Yeah, correct.
Last financial report that I went through was September, $4.1 million in cash. Are you still doing the same G&A of give or take 100 grand a month?
It would be less now. Last year was quite busy because we were also in conversation and doing some work overseas around building the company, not just in terms of marketing, but also potential acquisitions. So there was more travel last year than there has been this year.
Hmm.
Currently, I can say as of this morning that we sit at just under $2 million still in the bank. So we still have money in the bank.
Right. Much larger drill program. What should I be thinking? Sort of 3 to 5,000 meters or more than 5,000?
I would say 5 is a good number to expect and potentially could increase as we go through the summer. You know,
Okay.
the advantage for us is we can drill 12 months a year here with obviously the 2 breaks for the different hunts. And you want to wait for certain times in terms of freezing or the thaw. But we could be active with a drill 12 months a year, as is Patriot, as is Winsome. Uh,
Hmm.
our geology needs to justify that because obviously in different seasons the costs go up. In spring, we would be using a helicopter supported rig, which changes your cost on a per meter basis, but on a day rate. So I would expect part of the spring program will be a helicopter supported, just so that we're not waiting until August when everything is completely dry. We want to have a rig in there in advance of that. So we would be, in June, we would have a helicopter supported rig. So that would increase the cost in that phase. But full summer, full fall, and winter, not necessarily requiring. I mean, we're fortunate, and part of the strategy of the land acquisitions we did was the infrastructure, and have that Trans-Tega road that goes right through our property. Like where we have made that discovery hole sits 350 meters off of that road.
Hmm.
And so our ability to access the target areas is much easier and cheaper than some of our neighbors who have to do everything by helicopter just because there is no road access.
If you want to do 5,000 meters, even if all of it was at $400 a meter, that's still more money than you have in the bank right now. In terms of capital raise, how are you thinking about it strategically? Get the assays out first, or get the assays and start the next drill program? Get the first assays and then raise to finish the program? How do you see capital raising here?
That's the question that we talk about daily. And I'm fortunate I have a very active board, and we literally talk about this on a daily basis. We've turned down money this year already. We've turned down traditional flow through as well as what has been called charitable flow through. We want to do the financing on terms that make sense for us as shareholders and for our shareholders. We also, as a board, feel that if we don't like the next terms of financing, we would finance it ourselves. As I said, the 3 largest shareholders sit on the board, and so we're committed to advancing the project. We've had a number of inbound strategic approaches from chemical companies and mining companies. My response to each of those inbound calls has been, we're not doing offtake, we're not doing joint venture. The only thing we would consider would be a financing at a premium to the market. And I term it a get to know you financing. So let's find out if we're actually well suited for each other. As a small, nimble company, we can get in and accomplish a lot more than a big mining or a big chemical company can, because they just have a lot more people that have to get blessed and committees to sign off, and the cost around them being able to mobilize is a lot more expensive than us. And so we think we get way more value per dollar than if we were to have a joint venture with a big brother come in, because they just don't move at the pace that we can move. And we've proven that over the last 12 months.
Right. The raising equity and so diluting the stock instead of diluting the asset. That I suppose that's a consideration that you also have to always manage as a junior. But the number of shares outstanding with the number of fully diluted shares also relatively high here. It's getting up there. Any plans to do a rollback or any other way to manage that?
You sound like you're Canadian now, Antonio. That's I've done some marketing in the last 12 months, and I may even have said this to you when we were together in Zurich. The one of the first questions a Canadian will usually ask is, "What's your fully diluted count?"
Hmm,
Where an American and an Australian and European typically ask, "Well, what's your market cap?"
hmm,
Uh, Similar question, but a very different psychology. Now, do I like my share count? No. But that's the challenges of a junior company in a challenged junior market over the last 7 years. We've had to do that. But the good news for our investors is that as a management team, we've written checks every round of finance. So we respect the capital coming in. Do we plan a rollback? No. Where could we manage that? Well, we're in conversation about divesting at least one of our gold properties, probably the Banner in Idaho. We also have an expectation as a company that we think it makes sense for us to seek a listing on the Australian Stock Exchange. And the quickest and fastest way for us to do that would be through a merger with an already listed company. And so where we think that makes sense is on a transaction of that kind, which there's no guarantees. These are conversations that have been going on for a while now. And the challenge we face is dilution on a transaction, and our market cap at its peak last year was 50 million, and today I sit at 16 million. So the dilution just doesn't make sense for us to aggressively pursue that. But we think with a re-rating of the company, we think the drill results will re-rate us and see a better price point. That those conversations can happen quickly again because we've already established sort of who would make sense for us as that candidate to merge with.
hmm.
At that point, we could do a consolidation of the shares. The other side of that is we would also consider spinning out and listing and giving our shareholders a second lottery ticket by spinning out the cobalt assets and make that a standalone company. We're wise enough to know that it's a different skill set to manage a cobalt operation than it is a lithium operation. And so we think it would probably make sense. And certainly our shareholders that have come into the story in the last 12 to 18 months, they've come for the lithium. They don't care about the cobalt. Cobalt's not a metal that a lot of retail investors really understand. And so we think big picture, there's still a real opportunity on the cobalt side, but certainly the investment community has turned their back to it. And so maybe with that listing, we would then spin out and create a second company. But do I like my share count? No. But that's the reality we're facing. And we think that we can still show a great return for investors that are considering us as a part of their portfolio at the current market price.
Would listing on the ASX be a dual listing or just moving the listing altogether?
So the way it would work structurally, I don't want to bog down with too much of the transactional challenges, but I certainly have in the last year and a half, I've become a bit of an expert in what's involved. It would be in Canada a plan of arrangement. So the Australian company would, in essence, take over us so we'd become a part of the Aussie listed company, and then we would reapply it back to Canada as the new co, and then subsequently get the U.S. listing that would follow that. But it would be the Australian company taking over the Canadian company and then relisting the merged company back to Canada. So we still think it makes sense to have multiple listings. We've got 27 million shares now held in Australia,
Hmm.
all since May 1st last year. We've got 21 million shares held by U.S. investors. When COVID was happening and in Canada, we couldn't do much. I went down and did a lot of marketing in the U.S. because there was a lot more freedom to move around. And so I went and did a number of road shows and was able to get a lot of U.S. support. And they loved the fact that we're in Idaho. Idaho is a great place to be. The governor is a pro-mining governor. I don't know if you saw, but the Perpetua has just announced for their Stibnite project, which is really effectively a gold mine, but there's a big antimony credit. The U.S. Import-Export Bank has provided them a term sheet for $1.8 billion, which is tremendous. You've also got Jervois, which is an Australian listed company, but they've gotten $28 million from the Department of Defense for expanding their feasibility study and considering the move of building a cobalt refinery in the domestic U.S. I think that happens, and I think they get a similar type of term sheet that what Perpetua just did. but certainly the governor's office has sent me into Washington a couple of times to meet with lobbyists and governors and senators to get support. And they've said that with a discovery, we could expect to get off balance sheet funding. And we think that we shouldn't ignore that. And I'll be back in Washington at the end of April,
Mm.
having more meetings. We want to have the ability to get off balance sheet capital wherever we can. And we think that we offer that to our shareholders and that we need to pursue that.
What kind of timeline are you targeting for listing on the ASX?
So with a merger of the kind I just described, that's a 3 to 4 month process.
Mhm.
And so certainly we would want to wait till we had data from the assays to see how our market responds. But the appeal of being an Australian listed, and maybe I should give why would we do that? Because obviously there's additional costs to that. Well, one is our two closest neighbors who we share the Greenstone Belt, being Patriot and Winsome, are both Australian listed. You also have a more mature lithium investor audience because they've made money on lithium. I mean, no Canadians have made money on lithium. They all lost money on Nemaska. They all lost money on North American Lithium. They had never even really participated in Patriot other than a select few. So the Canadian retail investor, and I'm a Canadian retail investor, so I can speak from my own perspective, no, likes precious metals and a little bit of copper, doesn't even touch nickel anymore, and does not even think about the bulks. Where the Australian market, they are now in lithium 3.0 and have made money in lithium 1.0 and lithium 2.0. And so they understand the opportunity and the risk reward. And also by having that Australian listing, we can access the superannuation or pension money that is only available to ASX listed companies.
Mm.
And that's $3 trillion of capital that we can't get as a non-listed company. But with that listing, all of a sudden we have that pool of capital open up to us. And as you know, the pool of capital available to junior resource is shrinking by the day. And so we need to seek an audience and access to capital. If that means get that listing, we're going to get that listing.
Mm.
But can it happen? I would hope to have that happening through the course of our summer field season so that we have that listing by fall.
Right. If it's a dual listing, are you still going to be able to do flow through financings?
Correct. Yep, absolutely. We've seen Australian listings only access the flow through. It's not about where your listing is for the flow through, it's about where the asset is.
No. Okay.
And,
I thought maybe depend then. Oh, but then maybe you just work with a Canadian company who does flow through like Peertree or something like that. You don't necessarily have to. Okay. Sure.
yeah,
Um.
and what the direct rules of flow through is it has to be spent in the ground. So it's not spent on G&A. It's not spent on anything other than what is going into the ground. And it's based on depending what each province that you're going to spend has different credits. So the good news is in Quebec, they also have a critical metals credit. So we can actually do a financing at 100% premium.
Mhm.
Where if I was in Ontario, I could only do a 70% premium.
Yeah.
And that difference of 30%, that's dilution. So obviously we want to limit the dilution wherever possible.
Sure. You're mentioning the summer season there. The summer drill campaign. I'm thinking permits. We didn't talk about permits. You applied last year, I believe. You got them this year. How far did they take you, the permits that you have right now?
We were 28 days turnaround to get that initial drill permit.
Mm.
The one that for the upcoming program has been submitted. And so we expect to have that in hand long before we're even back in the field. The Quebec government has prioritized critical metals. And so when you make application, they see that you're pursuing a critical metals element,
Mm.
they expedite the process. They have been unbelievable as in terms of jurisdiction to work in. And my hats off to them. As a resident of Ontario, I'm quite envious of the benefits that the Quebec government's offering our industry versus other provinces.
Mm.
They are light years ahead,
Sure.
and big ambitions within Quebec of what they want to be in terms of creating an electric corridor along the St. Lawrence to feed in to the U.S. Pivot to the battery.
Mm. At least you have better airports in Ontario than the guys have in Quebec. But okay. That's just a personal note. What about the relationship with the First Nations over there? Everybody happy?
So the fires were a blessing and a curse. So I'll maybe speak back to the ethos of Champion. So in Idaho, wherever we possible, we always hired local. And so our heavy equipment operators, our techs, all were from the community we were operating our projects. Our students were grads from Idaho universities. We want to have as much local DNA as a part of that as possible. So when we made our first announcement in September 22 of our acquisition, the first person I called was the chief of the Cree First Nation in that territory where we were moving into to introduce ourselves. And so we opened up a conversation. How, we're here. I want you to get to know who we are, what our expectations are, what our ambitions are. So I was doing regular calls with them. We then made a small donation to they have a big disadvantaged portion of their population. So that during the holiday season of that winter, we made a small donation towards their gift drive for disadvantaged families. And then in the spring, we were talking about how can we find ways to work within your community, and anybody who wants to be in our industry, can we find ways to employ them? And then next thing you know, the fires happened. And so through the fires, we were able to, I was reaching out on a weekly, bi-weekly basis to try to see what can we do to help. And I don't know if everybody, certainly I don't know how well and understood the fires were for your audience, Antonio. So I'll maybe dive into what the typical forest fire season is in Quebec and what last year was.
Sure.
So typical year, you have about 17,000 hectares will burn. Last year, just in the James Bay, it was 1.7 million hectares. So that's a magnitude greater. How the Quebec government fights those fires is based on, is it an economic crop? And because of the James Bay, that's not considered an economic forest. It's sparse jack pine and the odd spruce. They let those burn and prioritize what would be considered the crop yielding forest. The only time they were come in the north was whether there was a community at risk or infrastructure. So our helicopter got seconded. It was being used for water bombs. Well, we know they did it along the Trans-Tega because that's an important road for the Hydro-Quebec, because Hydro-Quebec's largest power dam sits 50 kilometers west of us. So we knew that there was going to be, selected areas where the Quebec forest fire people came in, and God bless them. I mean, I can't imagine the risk and what they do. But they were busy further south. So our area, we were literally on our ground. We had the fires touched across the western part of our property. But in talking with the First Nations, it was, what can we do to help? How can we help you? What is it you need? And we've actually established a GoFundMe page. We're raising money for that community. We've been able to get a couple of NHL hockey players to make some donations of gear, and we're trying to figure out how we can impact. And what the chief and the deputy chief and the youth chief have communicated to me on a regular basis is, 60% of our population is under the age of 30. And because we're remote and it's so cold, we have an obesity problem. If you can find a way to get us sports equipment and help build us some sports facilities, that would be what we need the most. And so that's what we're trying to do for them right now. But we want to show that while we're new to their territory, we're concerned and want to be considered a good neighbor. So the fires have been devastating for us for a season. It's been devastating to them for a much longer period, because those fires have impacted their water with all the soot and ash falling into those lakes. It's impacted the fish. It's impacted the hunt. Their way of life, their traditional way of life, has been severely impacted, and that's a 5 to 7 year regrowth. That's not a 1 year challenge for them. That's a multi-year challenge, and so it's going to be a tough couple of years for the community. And so we need to continue to try to find ways to raise awareness and show support for that.
Right. What kind of official agreements have you signed so far, and what else do you need to sign in order to keep moving?
We haven't had to sign anything because these are very early days. Obviously, we just put our first drill holes in. But what we do is we have regular correspondence with the local hunter trapper. They call them tallymen. So we communicate to there's 2 different Cree communities that are within our ground. We're within 2 of their territories. And so we send out regular communication as to what our activities are in the field so that they're aware. And so we engage through those, and we're going to be up visiting with both the chiefs of those 2 communities in June. When the rig's turning again, we're going to go out to spend some time with them.
Okay, but you can still start drilling. There's not going to be anybody blocking or anything like that.
Yeah, it's a very commercial First Nation. They're very I don't know if it's tied to the history of the fur trade, but they're much more commercial than a lot of other First Nations bands in different parts of Canada. They are economically driven.
Sure. There's 9 concessions that make up your entire land package, I believe, right?
We have 10,086 claims.
Okay. Um,
Uh, I don't know when you say concessions, what you mean by concession.
because I believe you picked it up sort of in
We did 9 acquisitions.
9 bites, basically. Where I'm going with this is trying to figure out what the royalty situation is on those parts of the project. Who owns
Sure.
those royalties? What kind of royalties are those?
So let's talk total acquisition cost first, because I think it's important people understand transactional value. The average cost for us across on a per claim basis was $2,400, mix of cash and shares. We've tracked every single transaction in the James Bay over the last 3 years, and certainly in the lithium gold rush of last year, when we saw a lot of Australian listed companies come in and throw stock around like drunken sailors, we saw a very inflated price being paid for claims. The average cost is now over $13,000 a claim. So we think we did good transactions. We also, you'll see on our land map, we have some holes in the donut. Those were people that wanted to hold ransom on their ask for what they wanted, and we weren't prepared to be held for ransom. And so we've left those pieces. And I've said to a couple of them, we're going to make you rich, but not from ourselves, from somebody else going to overpay for that. We've got more than enough ground to do what we need to do. So the royalty, the transaction, I'll give you a typical transaction. So we'd have a small amount of cash, say it's $50,000, and then a block of stock, depending on, and at the time we were negotiating, we were basing it on a 5-cent share price. But I used the same template across all of them, and we control 100% of everything that we own. So there's no earn in. We don't own 80%. We don't own 30%. We own 100% of everything. Within the stock, we did at least a 1-year escrow for half of that, and anything over 250,000 shares, they need to give us 5 trading days to place it, so that they're not impacting our market. The royalty is a 2% royalty with a 1% buy down for $1 million, and that's standard across all of them. So it's a universal number, so it's easy for us to know there's not a separate royalty in terms of the value of that royalty, depending on who we negotiate with. The most we were prepared to do was 2% with a 1% buyback at $1 million, and so that's across all 9 acquisitions.
Okay. You don't own any of those royalties personally?
No, nobody in the company does.
Okay.
Those
Good.
are all third party. One is a public company. The rest of the transactions were with privates. They were families and prospectors that are from the Quebec region.
Right. So you basically I mean your involvement here is through the shares that you said they're all bought and paid for. What's your average cost of capital?
Mine is 11.4 cents.
Okay.
Paul Fornazari, who's the second largest shareholder, is 11 and a half, and Gabriel Pindar, who is our largest shareholder, is just under 12.
Hmm. Okay.
So
So still
we're
higher than the market price.
we're 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 out of the money, but we're not here for a 10% return. We believe this is a wealth creating event, and
Good.
I'm sure you hear lots of that from juniors. But I would say the difference between us and a lot of juniors is we actually put our money where our mouth is. Each of us is in over 7 figures, so we're committed to this. This
Right.
this matters to all of us.
There was some RSUs that I was going to ask you about, but I suppose this kind of explains it as well. In terms of options, you keep putting money into this company. I suppose that's sort of your idea to keep on doing that in the future as well.
Correct. Yeah, we're gonna insiders will participate in the refinancing.
Right. Okay.
My rule of engagement with my team is you pay to play, and if you need to sell stock, you need to get off the board. There's only 2 reasons why an insider should sell stock. One is because they need to exercise options or warrants, and they need the money to do that, so they're putting money right back into the treasury, or they got a tax bill that they got to pay. Our former chairman last spring came to me. He was dealing with some health issues and a personal matter that required funds. He said, I need to sell some stock. Paul and I bought 6 million shares off him, and he resigned the board the next day. He understood the rules of engagement at the time. And that's still the same rule still applies. This is not a lifestyle company. If people want it for a lifestyle, they pick the wrong guy to partner with.
I like that. I like that approach. I like how you said it. And this has been a good overview. I wanted to sort of touch upon the Idaho properties as well, the cobalt. I don't assume you're doing anything in the meantime. You want all the money to go into the ground in Canada, as you said. But why not consider a sale instead of a spin out? I mean, could you not use those properties to finance the drill program instead of do capital raises?
So we're in the process with Banner right now. We've got several groups in our data room. My goal would be to monetize that this year to allow them to have a field season. And I would expect it to be a similar junior type of deal as what we did in our acquisitions in Quebec. It'd be the divestiture in Idaho, where we get a little bit of cash and some shares in whoever it is that we transact with, and join them in their journey, and hopefully a successful one, so that we can benefit by having the shares increase in value. Champagne, our other project that we would consider doing a transaction on, that's a past producer that Bema Gold had in production in the late 80s, early 90s. We think there's a porphyry at depth. We went in and drilled that in 2020 and didn't get the joy that we were hoping for. But we still think there's a real target there. We've got a couple of majors in the data room there. We're seeking a big brother on that. We also have been around long enough to know that porphyries kill juniors, and so we don't want to take on that obligation or burden for our shareholder. The cobalt itself, I don't think there's any value in our market cap on our cobalt ground, but we think strategically it makes sense to hold it. There is holding costs in the US. You have a yearly claim fee that you have to pay every September 1st. And so we do have carrying costs there, and that's also why we want to also reduce our exposure by selling Banner. But there is carrying costs. But our current plans for this coming year is around permitting for the Twin Peaks project. We think there's a real opportunity for a discovery there. It is a longer permitting process in Idaho than Quebec. I told you how we had our first permit in less than 28 days in Quebec. It's a longer process in Idaho. So that is something that we're doing the paperwork for, but not expecting to have a drill turning there this year.
What are those holding costs, by the way?
$175 a claim, US.
Okay.
So for us, last year for our entire land package in Idaho, I think it was $148,000.
Okay. Okay. So it's not a well. It's a cost.
It's not inconsequential, but it's not a massive burden either. But it's still that that goes out every September 1st, so you got to be prepared for that.
Yeah. Good. Okay. So if a deal were to happen, you would prefer pushing for it to happen before September 1st.
I would like to have it done before the summer, so that whoever we're doing a deal with can actually come in and have a field season.
Okay. Very interesting.
But certainly before September 1st. But ideal world, I'd have it done in the spring to let them we still have a permit to drill at Banner. We still have a permit to drill at Champagne. So whoever's coming in doesn't have to go through that process. At Twin Peaks, we don't have a permit, so that's underway. And so we actually have a drill ready target on 2 different properties that has a drill permit in hand. So we think it's a compelling opportunity for the groups that we're talking to, and obviously they're talking to us because they think it is too.
Okay, aggressive strategy for the next couple of months. Sounds like there's going to be a lot of news release. How do you believe you have a good story, obviously, here on your hands? As you said, you're not the only one who in the lithium space who believes that. Definitely not in the junior space. The junior space seems to be picking up a little bit. I don't know exactly where it's going to go, but how do you communicate everything they're doing here to shareholders, and where do you go to? You go to conferences. What else are you doing for marketing?
So we do selective conferences. My goal is to try to look in the whites of the eyes of my shareholders once a quarter, and certainly to be available and accountable to them on news. So obviously we had news on the 9th with that discovery hole. I had a busy day on the phone and continue to be on the phone. And we all will live in a 24-hour world now. So I've been at odd hours having conversations with some of our Australian shareholders, and but that's part of the joys of the job. It's important to be available and accountable, and I take that very seriously. People talk about social media. I'm going to show my age and the gray hair in my head. We have a social media presence on all the various platforms. I don't know that it's the ideal way to reach investors, because I just think that this industry it's a 7 to 10 year process from a drill hole discovery to a mining situation. I think the scroll and tap and scroll and tap approach can't think to Friday. Or do I really want fast money coming into the stock? I don't. I mean, I like social media for awareness and getting information out and sharing our journey, but I'm not relying on it for investors. For us, it's more of how we keep our shareholders up to date of what's happening.
Hmm.
And my younger part of my team would be cursing me right now for saying that, but that's just my own opinion. Do we do it? Yes. But do I think there's an audience and value to it? Sure. Would I ever think that it's going to bring me capital? Never. Uh, that's not how capital is sourced. That's how you increase awareness. Um, we have some pre-committed conferences this year that we're going to be attending, and we think with the data that will come out of the assays, it probably makes sense to put together a more robust roadshow to get out and really have an awareness of here's what we've already learned, but here's what's to come. You know, if we've got a discovery and then we're sitting with a nice interval of nice, I'm not even going to put a number out there, but it's a lithium at surface discovery, and we know the drill's coming back. My job is to give opportunities to investors to be aware of it before the stock moves. You know, it's easier for somebody to say no than to say, why didn't you tell me about this 6 months ago? So I want to give them the chance to say no.
Sure. That's a good overview. Well said on the long-term thing. There's a reason why I do these things more in depth. And I've had people speak to me and say like, well, why don't you do the sound bites, 5 to 10 minute interviews? I don't think there's much value in that. I think that people who are willing to commit and sit through an interview and listen to everything throughout are serious people who will then go on and do more research, of course, hopefully, and then take a decision that keeps them for longer. It's just a different mentality. It's just different people sticking around to these things. So that's a well said. I'm happy you were saying that, and I agree with it. What am I forgetting to ask you here, though, Jonathan? What did you come here hoping to talk about that I'm failing to bring up?
I think what's often overlooked is the people involved in the business. I'll talk to you as an investor because I am one. So I'll talk some of the things that matter to me as an investor before I decide I'm going to put my hard-earned money into a deal. Has the team made people money before?
Hmm.
I don't want to back a rookie. I want to back somebody who's got a track record. They've done this before. I want to see significant ownership amongst the insiders so that they're aligned with me as an investor. I want to know, okay, so within the specific metal of choice, what have you done and who'd you do it with? And good people can take mediocre assets and use them as currency to get better assets. Mediocre people can ruin the best assets in the world.
Hmm.
I base at least 95% of my decision, more often than not 98% of my decision, on the people that I back and invest with. And so when I look at Champion, I've got a board that others should be jealous of. I'm certainly the proudest thing I am, beyond being able to be a good negotiator and make these acquisitions in a timely manner on good terms, is the board I've been able to put together. I've got Paul Fornazzari, who's a securities lawyer, who was the founder and first chairman of Lithium Americas. He then left that board and was a founder for Neo Lithium. So he left Lithium Americas and got about a 3 billion market cap, formed Neo. Neo went from a private company to being taken up by the Chinese for $940 million. Gabriel Pindar, who's an engineer by training, he's been involved in building 11 mines around the world, including one in Quebec for ArcelorMittal, was involved with Lithium Americas, and then he was a founder, director, and COO for Neo Lithium. So again, pedigree of success. They've done it. Patrick Highsmith, who's a geologist. I first met Patrick when he was CEO of Lithium One, and he hired my firm. So my background, I haven't really talked to Antonio. I was a former banker. I had my own banking advisory firm called Harp Capital. In the late 2000s, Patrick hired Harp to seek a partner for his Sal de Vida project in Argentina. And we brought him LG, GS Caltex, and Cress into the Sal de Vida. And about 15 months later, Galaxy Minerals took over Lithium One. And Galaxy became, with merger with Orocobre, became Allchem. And now they've just merged with Livent to become Arcadium. It's been a roller coaster of names, but it's the key thing there is that the project that was Sal de Vida and the SEER project, now named James Bay, are two flagship projects for Arcadium. Those were assets that were a part of our team. Lithium Americas is now producing, and Neo is in construction. So all the projects we've been a part of has been led to a mining decision, and that's what we intend on doing with our Champion project. Now, you said, and rightly so earlier, that we're just calling it the Champion Electric project. We haven't put a name to it. We don't believe you name a project till you've got a discovery. So right now we're having conversations internally as what do you think the right name is? Because now we think with that drill hole, once we get the assays, we'll be putting a name on that project. Until then, it's just Champion Electric's lithium project.
Hmm.
We'll blend the name on it once we've made that discovery. But back to my team, like that, we've done over $6 million of value creation for shareholders. and each project has been led to a mining decision. Now, my background, I've done over $700 million of business bringing Korean conglomerates into mining projects. So I know the audience of the groups in Korea and also in Japan. Paul and Patrick and Gabrielle have done business in not only Korea, but also in China. Now, China's persona non grata, but that may change over time. So we understand the bigger game and the bigger goal. Our ambition is we're going to lead this to a mining decision, and I'm either going to be replaced by the engineer who's going to build this, or I'm a shareholder in a bigger company. Either way, it's a win. I'm either happy that I've been replaced by the engineer because we're about to break ground in something meaningful, or I'm a shareholder in a bigger company because they saw an attractive opportunity to come in. But the good news is we control 30% of the company, so the exit will happen on our terms. Nobody's going to come in and steal us out from under us.
I'm okay with all that, unless you end up calling it a Camaro or a Ford Mustang Discovery or something that is too close to Corvette. But I appreciate the overview.
My
End
last
of
name's Buick. I'm not even going to call it Buick.
I'd be fine with that actually. We don't see many of those around here, so good
No,
point.
they're harder to find.
Jonathan, it's been a pleasure. It was a good overview. I appreciate you investing your time in me, and hopefully you can keep me up to date over the next couple of months. But thank you so much for sitting down with me today.
Really appreciate the chance to come in and talk about the company and our ambitions. And certainly we think that 2024 is going to be an instrumental year for us as we continue to advance the asset. And I think there'll be lots of good news to warrant us coming back and visiting with you again, Antonio. So thank you for the opportunity.
All right, well, thank you, Jonathan. I appreciate the overview here, and I hope you'll be able to keep me up to date with the geometry of the pegmatites. Hopefully, maybe even some grades soon, so we can have a more of a geological conversation next time. But in the meantime, I'm going to Australia, the bloody land down under, where I'm looking for copper and gold and talking to Alistair Waddell. He's the CEO of Inflection Resources, company listed on the CSE in Canada under the ticker symbol basically copper and gold. So AUCU, we're an average of about 93,000 shares trade each day with a 52-week high of 33 cents and a 52-week low of 15 cents. With a market cap of about $18 million and about 95 million shares outstanding, today this is a 19-cent stock. 20 million warrants, 9 million options. That makes for about 124 million fully diluted shares. Some famous names in the story. This is a Crescat stock, as my friends would call it. So yes, Crescat Capital is involved, and so is the Resource Opportunities Fund. High net worth individuals in combination with those two own about 40% of the company, and management owns a little under 30% of it, with the company saying that about 64% of it is owned by only 10 parties, so the 10 biggest shareholders. As you see further on and might recognize due to some of those names involved, this is indeed a NewQuest Group company, which is a group of, well, in total 5 companies, some of which you're likely to see on the barbecue in future episodes. As of the last interim financial statement, which is dated December 31, Inflection had about $2.3 million in current assets, about 1.8 million of which in actual cash, as well as some recoverables from some of the projects. Another aspect that will become more clear as we move on. That cash sat on the balance sheet against short-term account payables of about $430,000 and a derivative liability of $170,000 with no long-term debt, resulting in about $600,000 in total liabilities, and so a debt-to-equity ratio of about 1.5 of 1/10 or 0.05 here. That same statement tells me that Inflection spent on average over the last reported 3 months of the fiscal 2023 about $65,000 per month on what I would call G&A, and they spent about $470,000 drilling and on drilling and assays, leaving the drilling to G&A ratio at roughly 7, which means that G&A represented about 12% of the overall cost here. And again, as always, this is only a snapshot of a 3-month period. So things do change with these companies, and you have to go over to the company's website as well as sitterplus.ca, look at the most up-to-date numbers, the official news releases and stuff like that, because again, these numbers change. This is a non-revenue generating company, and it relies on the public markets for financing, which again means that you should follow up on that. Exciting accounting fun to the side here. Inflection has 2 projects. One is called New South Wales and the other one is called HEREIN, both in Australia, obviously respectively in New South Wales and Queensland. But the majority of the drilling dollars have been going into the NSW, as that is where Inflection has a partnership with AngloGold on. NSW New South Wales is also where one of Australia's main copper belts is. This is often considered the most important one, with Newmont and Evolution Mining operating in the region. Inflection, by the way, holds over 7,000 square kilometers of land, and this is truly a massive land package. It's larger than Palestine and a bit smaller than Puerto Rico, or about 3 times larger than the country of Luxembourg. So it's big. But the district in and of itself is much larger than that, with dozens of other companies operating there, although I believe Inflection has the largest foothold of the mode. Again, they're chasing large, so that'd be tier 1 porphyries here, alkalic porphyry specifically. So we're looking for big intrusive bodies and when I say they, by the way, I don't only mean Inflection, but also Anglo Gold, which is funding up to 10 million Australian dollars of exploration expenditures across a couple of the largest packages here. While Inflection operates the project, it also gets a 10% management fee during phase 1. And phase 1, by the way, says that Anglo has to spend at least 6 out of the 10 million. And when phase 1 of this agreement is completed, that would be within 36 months of last summer. During phase 2 and phase 3, Anglo can choose 5 projects that it liked, and then it has to spend 27 million Aussie dollars on exploration per project. So that'd be a total of $135 million to earn up to 65% interest in those 5 projects. And then come phase 4, if Anglo spends some more money to complete the PFS on each one of those projects and prove a minimum of 2 million ounce gold deposit, and that'd be a gold equivalent deposit in a measured and indicated category of the NI 43-101, then it's going to get another 10%, and that'd be a total of 75% ownership in any of these 5 PFS ready projects. So that would basically mean a 25% free carried interest up until PFS remaining in Inflection's hands here. There are more details to this, which can be found in the company's news release, which was dated June 14, 2023, and more about that further on in the conversation as well. As I said, there is a project in Queensland, Australia too. It's called HEREIN, and the geological thesis here is different. They're looking for high-grade orogenic lode gold deposits not too far away from one of Queensland's historic gold camps, specifically the Croydon mine that produced over 1 million ounces of gold at an average grade of 35 grams per ton. So high grade. This again is still Australia, so expect large land packages, although not as large as the one in NSW. This one has a 30-kilometer strike length, so still large, not as large. They currently only own 70% of the project, but there is a pathway to 100% ownership that, again, hopefully will be discussed more in depth in the conversation that is to follow. But before any of that, Alistair, Aussie company listed in Canada. I can hear a little bit of an accent on your end too, I think, and on the CSE specifically. What's up with all that?
So we are listed in Canada and the US as well as we have the Frankfurt listing. But really, I get the question a lot. So why isn't Inflection listed on the ASX? And it really came down to when we put the company together back very early in 2018. Ultimately, the early capital came from North America. I did a fair amount of marketing as a private company in Australia at that time, and never really got any traction in Australia. And ultimately, it was really where the majority of the shareholders were based, and the subsequent financings really came from North America as well. So it ultimately got a little bit too hard to do an Aussie listing, and really, the majority of the shareholders and board members are based in Canada. So that's the rationale for the Canadian listing.
So you're not planning a double listing or moving the listing or anything like that anytime soon?
So yeah, no is the short answer to that. But what we've always said is, if we can make a discovery here, and the logical move would be to also do a dual listing in Australia as well. But the reality is, it's kind of an expensive endeavor to get an ASX listing. It's probably around about $500,000 to get it done properly, and it comes with a fair amount of challenges to get that over the line as well. So I think we need a catalyst to justify doing that. And right now, this is about getting money into the ground and just being focused on that discovery. But one drill hole would potentially change that scenario. I mean, obviously, it is really an Australian story. the technical team is mostly Australian, and the assets are obviously there. So at some point, yes, but we don't have any plans right now to do that.
Right. That's also exactly where I was coming from. But also considering that just the ASX seems to be doing better. Might be just me, but when I'm trying to value companies, they typically get a higher valuation on the ASX than what they get in Canada. Oftentimes, the argument is made that the ASX investors just understand mining and exploration better. So, yeah, good point. Fair answer. I don't want to waste too much of your time because I understand you do get asked that question a lot. You want to
But
say something? Yeah, go ahead.
yeah, just to finish on that one, really, I mean, I think the ASX and the Canadian and US markets, I mean, they kind of ebb and flow a little bit in terms of which ones are doing better than the other. I think it's fair to say until maybe nine months ago, the ASX was, considerably outperforming the North American listed exploration stocks. And I think that was mostly driven by the battery metals and lithium and things like this. But it seems like North American markets have been in the doldrums for much longer than the ASX. So, but I think over time that changes as well. And there are times when the North American markets seem to outperform the Australian ones as well. So, really, it's kind of tough to predict how that will go, I think.
Hopefully, the Canadian markets save themselves. Anyways, let's talk about geology here. You have something you probably get asked a lot about, and then I do want to have maybe a longer conversation about this. But if you have a sedimentary cover on top of the target geology in NSW up to or as thick as 500 meters up to 500 meters, so quite thick, right? How do you manage this sedimentary cover in terms of drilling efficiency and cost effectiveness here?
Yeah, so really, stepping back a little bit, I mean, that was kind of the opportunity. When we entered this belt in New South Wales, the entire northern extent of this belt, approximately 60% of the belt was covered with this blanket of post-mineral sedimentary cover. And, I'd get lots of questions about this, just the practicalities of how you actually drill through it. And, can you do it without the holes collapsing and whatnot? And really, at that time, the ground was free. We staked all the ground. We've got ground that extends over about 300 kilometers. It's a huge land position, as you mentioned earlier. And we started to systematically drill test a lot of geophysical anomalies that we'd identified in the basement sequence under this sediment. And what we do, and this is a little bit of the secret sauce here, is we use a technology called mud rotary drilling to cut down through the sedimentary sequence. And then the same drill rig converts to diamond drilling. So we do this sort of mud rotary drill, which just literally bores through the sediments. We don't recover any of that at all. We don't collect any samples whatsoever. We just get down as quickly and as cost effectively as we can. And then the transition to core drilling down the same hole. And our costs for doing this, the mud rotary drilling, depending on where we are, varies between sort of 50 and 70 Australian dollars per meter. And obviously, we're not recovering any samples, so we don't have that to deal with. And then we do short core tails at the bottom. And these can be typically, as part of a first pass scout drilling program, could be sort of 10 to 50 meters of core drilling. So what this really translates to, Antonio, is, as part of our first pass scout drilling program, we're drilling holes between sort of 25 and let's say 40,000 Australian dollars a piece, which is a very cost-effective way of testing a target. I mean, it's a glorified geochem sample, but we extrapolate a lot of information from these short intervals of core. And we don't just get the geochemistry, we're looking at the alteration, we're getting date samples, we're getting all sorts of information from these bits of core to try and build up a picture where we are within the belt and hopefully where we are in proximity to one of these alkalic porphyry systems.
That's exactly what I was going to ask, because it's kind of funny you call it a glorified geochem sample, is because that's not the only thing you want to get out of it. But how do you, given the variability and the thickness of the cover, though, and also switching between mud rotary and then diamond drilling, is it challenging to keep up so that the quality of the same post to a point where you're certain about the alteration that you're reading and the other stuff?
Yeah, I mean, the alteration can be kind of subtle. So we rely heavily on lithogeochemistry, and we look at we do systematic thin section work, for example. So we really get a good feel for exactly what alteration we're looking at, and particularly the geochronology. So we're looking for a very specific window in time of when these deposits were formed. And as the entire belt is covered to the north, we've made some inferences where the belt goes underneath the sedimentary cover, but until we get those samples, we're never quite sure. So we rely heavily on things like that. So it's a very sort of a disciplined and systematic approach to testing lots and lots of targets over a large area. And we typically drill between 2 to 3 holes as part of a first pass program into each of these targets. And one of the key things here, Antonio, is the scale of the target. We're looking for something very big, as you mentioned in your introduction. And this is kind of the key here. Obviously, we need something big to justify going under this blanket of sedimentary cover. So we believe 2 to 3 holes over a certain area, testing a specific thesis, is enough to tell us whether one of these mineral systems actually is present. Now, it's not certain, but if we're not seeing key attributes in the form of favorable geochemistry or alteration that you would typically see in and around one of these alkalic porphyry systems, we'll drop the target and move on to the next one. And that's a key part of the strategy, sort of a drill and kill type strategy, if you will. But just testing lots of targets as quickly as we can and moving on to the next one, cycling them over and taking that knowledge from each of those individual targets and holes and applying that to the belt and to the next set of targets as well.
But given the lithological variations within the sediments, which are knowable beforehand, before you drill those first couple of holes because of the limited visibility, how do you how do you manage that? Is it just sort of like 3 holes and then you look at the lithology, alteration, and all these things, and then just move on? Like how does that management process happen?
So the sediments are completely unmineralized. They're much younger than the mineralizing event. So they're just really an inconvenience in many ways. They're masking what we're seeing in the basement. So we know when we drill down through the sediments and we hit the basement, we're looking for volcanic rocks, which have got very different characteristics than the overlying sediments. So the challenges we have with the sediments are more just actually drilling through them. And for the most part, that really isn't a problem. They're mostly sort of siltstones and sands. And we use a big, heavy rig just to punch down. And we know very, clearly when we hit the hard volcanic basement sequence. And basically the mud rotary drill cannot penetrate the basement. So we immediately transition to core drilling at that point.
But there's no traces, there's no breadcrumbs, there's nothing in the lithology of the sediments that can tell you anything about the system, basically.
So it's a good question. So what we do, and we don't really talk about this, is we actually sample the bottom, I believe it's 6 meters of the sedimentary sequence, because these are essentially, it's an unconformable contact. The sediments are much younger, but due to erosion, we often get a sort of what we call a base conglomerate in the sedimentary sequence. And there's often, certainly there's a thought that we may see some transported mineralization just sitting on top of the prospective bedrock. But to date, we have not found that. We've looked very hard, and we analyzed the last few meters of sample with what we call a PFX-RF gun, and just looking for hints of, well, obviously copper and gold, but also in the multi-element geochemistry. But to date, we haven't seen anything of note in the sediments whatsoever.
Have you had any sort of unexpected drilling conditions, if you want to call that? Like you mentioned borehole collapses or deviation or stuff like drilling-induced alteration anomalies or something among those lines, like something that sort of, tips you off your scale for a while.
With the sediments, no. If anything, it's been a more of a positive response. We had a lot of naysayers early on saying we're going to have issues drilling through the sediments, and you're going to hit water, and you're going to lose holes through collapsing of the sediments and things like this. And we've drilled a lot of holes now, and I think we've lost 1 hole in all of that. So the odds have been tremendous to the point where we started off doing vertical holes, and now we systematically do angle holes through the sediments, which people said would have real problems doing. But to date, it's not being any issue. The main, not challenge, but the one variance we have run into is not hitting the basement sequence as we modeled. And we've had a couple of surprises. We've hit some felsic volcanics in one of the holes, for example, which came back with elevated sort of more rare earth type elements, which we didn't really expect. Now that we followed up since, and it didn't mount to anything, but that was a surprise. But we're really modeling the basement on a sort of a best efforts basis of using fairly limited information. The primary tool we use is airborne magnetics to do the primary targeting. And more recently, we've tried what we call ANT. So this is a sort of a passive seismic technology, which clearly looks through the sediments and maps out the basement contact and into the basement as well. But for the most part, it's been very, very predictable, the bedrock that we've hit to date.
Have you hit any anomalous uranium or something like that?
No uranium.
Okay. Yeah. I mean, I don't know. These things can surprise you. And I mean, what do I know? I'm not a geologist, as you can notice, but felsic volcanics, interesting. Written down. I have to look into this.
But what we have hit, I mean, at the end of the day here, Antonio, we're drilling features that have never been drill tested before. And invariably, there's no drilling anywhere near to these features. And that's what's kind of the exciting opportunity. And that's ultimately, I think, why we were able to attract AngloGold as a partner, is we're testing big, complex features that got many similar characteristics to these alkalic porphyry systems. And we're doing this 2 hours up a paved highway from these deposits. We're not doing this in the back of Timbuktu. This is mining friendly New South Wales. So it's really just we just don't know exactly what we're going to hit until we drill those holes. But using that sort of quick, cheap, cost-effective mud rotary drilling and short diamond tails just enables us to take oversized risks, we believe, but testing very big targets have the potential to deliver a true tier 1 scale discovery.
Yeah, you only just get as many flies as you get in Timbuktu, I suppose. It's always funny looking at these pictures. There's just too many flies in Australia. Someone has to take care of that. What you're using ANT, as you mentioned, not widely used all the time. How do you, when you read those results, how do you differentiate between hydrothermal alteration and other stuff there that whatever else could be sort of throwing again off your scale, given the complexity of the geology and sort of tectonic history of the region here?
So yeah, it's a really great question, and I don't have a great answer for some of that. We're, as you mentioned, it's relatively new technology. This is technology deployed by a company called Fleet Space Technologies out of South Australia, and it really is cutting edge stuff. The key part of this ANT is they deploy these sort of nodes which you insert into the ground, and they put them in at predefined spacings. Ours were put in every sort of 500 meters over a big grid over several kilometers. And they're beautiful at looking through the sediments and mapping out that basal contact, the uniformity with the volcanics. And into the basement, we've highlighted on our Duck Creek project a number of interesting features. It's identified a number of big structures that we weren't aware of previously, and it's identified a number of zones that are higher velocity and lower velocity. So the working thesis is that the higher velocity zones represent intrusive bodies, i.e. they're a little bit harder and more massive, and the lower velocity zones represent perhaps more volcanic rocks or rocks that have been hydrothermally altered. Now, we're doing this for the first time. So there's an element of experimentation with this, and we're gearing up to drill our first series of holes into these new features that we've identified with ANT. But there's an element of a leap of faith here in terms of this technology. It looks very, very promising. We've got some very interesting features in and around areas of our Duck Creek project where we fit favorable geochemistry and alteration in earlier holes that we targeted using mostly magnetics. So we're pretty encouraged with the fact we're seeing these features adjacent to where we've already got exciting alteration and geochemistry. But, to your point, it's new technology. And the proof will be in the pudding, as they say. They're going to have to drill some holes to find out what it means. But it's really highlighted some very exciting features that we had no clue existed before. And to be frank, my fear was when we started this, we would get no response in the basement whatsoever. So I'm highly encouraged that we've been able to map out very clear structures and what we interpret to be intrusive bodies. Now, whether they're mineralized is a whole other conversation, but it's certainly given us another layer of data we can apply to our targeting models.
To basically translate this to my 5-year-old brain, you tell me if I'm right or wrong, but it's you're gonna drill into the deep red stuff to see if there's alteration related to a potential intrusive moment in time.
So we're testing a variety of different features. We're looking for features of a certain geometry and in both in plan view and in the third dimension. And we're ideally looking for features that have got a sort of a halo around them. One of the challenges we've got here is that the host rock and the actual host intrusion that we believe would host the mineralization, the sort of the characteristics are not that distinct. And that's one of the challenges with these alkalic systems than perhaps we'd see with a calcalic system, like you get in, say, the Andes, where you get a big intrusive body, and then you have a sort of kilometer scale zone of clay alteration typically around these massive porphyries. So we don't really see that in these alkalic systems. They're generally more narrow, more vertically extensive bodies, for the most part, with more subtle alteration. So we're looking for something fairly subtle. And for the most part, we're testing zones of higher velocity with zones of lower velocity around them. I'm not sure if that answers your question, but there we are.
Yes. I mean, as long as you talk to me in colors, that's as far as my brain would go. But you also mentioned that there is potential for the mineralization to have been remobilized along the fault zones there. I suppose the structural geology comes in play here in the targeting as well. What's your understanding thereof? Again, maybe limited visibility thereof, but what's your understanding of the structural controls here?
Yeah, so again, we'll just base this on the A&T. So there's a lot of unknowns about this. It's not so much remobilization along the structures, but I mean, globally, you'll see that porphyries often are associated with big structures in the basement, and it's just great to see that there is that within that specific Duck Creek area. And one of the things we look for, broadly speaking, in the belt of rocks, these belt of rocks called the Macquarie Arc, and we look for structures, northwest trending structures, generally crossing this sort of arc. So it's a north-south trending belt. We're looking for northwest structures, and a lot of the mineralization or some of the major deposits are broadly associated with these northwest, what we call cross arc structures. So any big sort of kilometer scale structures are important. Now the significance is up for debate really at this point. It's still early days, but it's a nice thing to see for us. Yeah.
Right. And you say it's never, I mean, it hasn't been done all that much. Has it ever been done? Like, has there been a porphyry discovery using only A&T or anything that you can use as a geological comparable here?
I'm not aware of a discovery. It is very new technology. It's only really started to be used in the last sort of handful of years. I think you're going to see more and more of this. I think I'm hearing more companies using this, and Fleet Space are pushing pretty hard to market this technology, and they're putting out various case studies of porphyries and different deposit types. I've seen them using it for nickel sulfides. I've seen them using it on an epithermal deposit as well. So I think there's a variety of applications that can be used, but I'm not necessarily aware of a discovery that's been made as yet, though I'm certainly encouraged. I think it will come. It's just a matter of time. But it's an interesting technology in the fact it can be deployed quickly, and you can get data back within a matter of days, preliminary data. And one of the interesting things about it is you have the flexibility to move these nodes around. So if you see a particular feature of interest in a certain part of your map, you've got the ability to either increase the density of the nodes or maybe extend the nodes to the south, chasing a particular structure down and things like this. So that's the neat part of this technology, is the sort of the flexibility in this. And I think we're just going to see more and more applications to this ANT as we go forward.
What's the cost of the ANT technology for you? I'm aware of one other company using it in Canada that they're targeting uranium, but I couldn't get them to tell me the cost of it. What is it for you?
Yeah, well, I'm going to give you the same response. So it's done in partnership with Anglo Gold as part of some sort of commercial arrangement with Anglo Gold. But what I would say, it's reasonably expensive, but it's given us insight into a big part of the project that we didn't really have any great sense for. So yeah, I mean, I think with time the commercial rates will become more available. Yeah, our arrangement was with some group package with Anglo Gold.
Well, fair, almost non-answer, but I understand. There's not much you can tell me.
It's commercially sensitive, yeah.
Yeah, sure, no problem. You've explained to me how you come up with the targets. Let's maybe talk about the actual targets this year. Is that something you can already talk about, or are you going to come out with a separate news release as to the drill targets?
Yeah, so there'll be news. We put news out yesterday about the ANT targets at Duck Creek, but we've also been systematically drill testing other targets throughout the belt. So we've been drilling pretty much non-stop since last summer. We had a break for the year-end period, but yeah, we've been drilling mostly in the far north of our project portfolio certainly since the beginning of the year, and we'll be putting news out on that shortly. But we generally put things out in sort of campaigns or clusters of properties once we get a whole series of holes into these various targets. But the ones that we're testing right now in the far north, these are really brand new targets. I mean, there's no drilling. I think the nearest drill hole was something like about 120 kilometers away from these specific targets. So they're truly unknown in terms of what the public domain information about these various targets. So very exciting program.
Funny, if you drive 120 kilometers away from Brussels to the north, you'd be in a different country. You'd actually be in a different country if you drive to the south as well. Anyways, how's that? Where I'm coming from with this and the whole thing, and specifically about the cost and all that of the ANTs, because I'm thinking about the bureaucracy, if you will, in dealing with a major here, because in my experience they can be slow. But let me know what you think about this. But what I'm asking is because I'm thinking whether it's in their interest to make sort of maybe a bid for the company as a whole, if those targets work out, right? So instead of spending the money on your terms and your tempo under that agreement, I suppose they could slow you down with bureaucracy and make a bid for the company as a whole. Is that the case, and could that be the case, and how would you deal with that?
I guess they could. I mean, we operate the program right now, but from phase 2 onwards, Anglo Gold retains the right to take over as operator. We'll see how that all plays out. But yeah, I mean, ultimately we'll be in the hands of Anglo Gold at that point. To date, they've been fantastic partners to work with. But so I don't imagine there would be any issues in terms of trying to slow us down. I mean, it's very much everybody's laser focused on trying to accelerate a discovery. So it's not really in anybody's great interest to slow the process down. And there are timeframes for each of these phases as well. So they can't just completely stop. And I don't think it's in anybody's interest, including Anglo Gold's, to do so either. So the milestones they've got 36-month and 24-month periods for each of these phases. So yeah.
So what do they typically take, like a week or something to get back to you on a news release?
It's less than that typically, but it's we often have several iterations of news releases, and we have our own internal processes, and news releases then go to Anglo Gold for approval, and then we'll factor in all their comments and whatnot. But for the most part, it's pretty minimal, and they've been amazing partners to work with.
Hmm. So if you started drilling today, and then you can also talk to me sort of about how many meters you're getting per shift of drilling. But if you started drilling a hole today, when am I gonna know what's in that hole?
It's realistically, I got to say, we're not putting news out for every single hole. We generally do sort of campaigns, and we do it by sort of clusters of exploration licenses or a specific geological block within the portfolio. So typically, it's probably about 3 months before you see the results of those holes. But
Okay.
we've got the ability, if we tagged a big porphyry here, we could put news out and as required, but there's no restrictions on us on doing so.
Hmm. Wait, but there's still some assays that have to come out, if I'm not mistaken, from the last drill program, or is everything out already announced?
Everything is out. We've got a lot of assays in the lab right now from drilling this year,
Right.
but yes, there's always samples in the lab. I mean, we're constantly drilling, so it's not like we drill a few holes, stop the drills, and then wait for the assays. We're just constantly drilling, and we kind of leapfrog a little bit, move around. We've got lots of different targets as well. So even if we get sort of encouraging alteration or evidence of mineralization in one of the holes, we might still move on to the next target and wait for the assays and come back. So it is quite a more of a systematic sort of disciplined approach to testing lots and lots of targets. And we're not necessarily just going to drop everything. If we get some sniffs of alteration, we'll keep going with the plan and go back and make sure we've got rocks of the right age with the right geochemistry. And we don't want to waste Anglo's money either, drilling holes, chasing rocks that are the wrong age as well. So it's sort of a big company approach to testing lots of targets in many ways.
Well, that's a good point. You see, it's a big company approach because you're the operator. Does that mean you just basically pick the targets all by yourself, or do you also have to consult with Anglo before going and drilling?
So it is very much a partnership, but we did pick out the targets. I mean, there's a whole backstory to how those targets were developed, and mostly done with a gentleman called Dr. Douglas Haynes, who was the chief geoscientist for a very well-known Australian mining group called Western Mining Corporation, and Douglas has been serially successful at finding big deposits globally throughout his career. And really, it was Douglas's targets for the most part that started this. And for each of the target, there's an actual thesis and an exploration model to test that thesis as well. It might be one hole, it might be 3 or 4 holes, depending on exactly what it is and where it is. But ultimately, we've presented that. We presented that to Anglo Gold, about a year or so ago now, and they really provided the capital. They provided input in terms of technical support to fine tune things, particularly on the geophysical front and whatnot. But essentially, these are our targets as we presented to Anglo Gold.
Okay. Fair enough. That was sort of an in-between point. You said you have assays in the lab right now when you said 3 months from drilling to news release, but so I suppose we're somewhat in the middle. Does that mean a month and a half from now you're gonna have some news out?
Oh, I can't be specific about timing and news, but yeah, we're overdue probably a news release right now in terms
Mhm.
of the drilling in that northern block. Yeah, so yes,
Right.
there'll be some news out shortly.
Okay. When were those holes drilled again?
In the far north, so there's a block we refer to it as called Walgett, but there's a very large exploration license in the far northern piece of our portfolio of properties, and we mentioned that in the news release we put out just before year end, I guess.
Right.
Yeah.
I meant when, not where. Sorry, I was not clear about that. But when did you drill them?
Oh, they're drilling them right now.
Okay.
So they're still being drilled. So
No, and
there's
I mean the holes that the holes that they have in the assay lab right now, when did you start drilling those?
um, they would have been drilled in the first ones in mid to late January.
Okay.
Um,
Yeah, fair.
yeah. But they're constantly we don't submit big batches of samples. We'll drill a hole and then we'll send them to the lab as they're cut and sampled. So
Mm,
yeah, they're just sort of there's a constant stream of the results coming, if you will. It's just a
sure.
continuous program.
Okay. And this whole thing is really surrounding around me understanding. I typically like those kind of deals because I've had recent success with a comparable company that has a deal with a major where the major is paying for the JV and so on and so forth. So that's where I'm coming from with all these questions. Would you look for another strategic investor as sort of a counterweight to your Anglo here, or is that or would that piss them off kind of thing?
We're very happy with Anglo Gold. Right now, we're receiving a 10% management fee from operating this joint venture, which is about $1 million over that phase one period, more or less. So yeah, there's no desire to find another partner. In fact, we can't find another partner for the New South Wales projects. So, but yes. Uh,
Okay. So it's the 10% by the way you say so that's about 300 grand a year give or take because it's 36 months, 10 million, 10% a million by 3 or like
All right, so that 36-month period is the maximum amount of time which Anglo Gold has, or we have to execute phase one. It's really going to be executed much quicker than that, probably by the end of this year. So
hmm.
yeah, it's more likely to be 18 months rather than 36 months. And then the major companies will typically build in a little bit of wiggle room for, you know, whatever sort of delays, so that the deal doesn't necessarily collapse. And that's just speaking generally about exploration joint ventures. We had, a couple of years back, we had a torrential period of heavy rains, which delayed access to our exploration properties, and that caused significant delays. A very unusual event, but nevertheless, it was a delay. So that's the reason for the 36 months. I don't imagine it won't take 36 months at all to do that. So think of it more around about 18 months.
If it's 18 months that basically means the 10% is going to pay for G&A.
Yes.
Okay. So well
Yeah,
well go
we
ahead.
should be more or less cash neutral or just slightly under that. So I think we're not burning very much beyond what you mentioned in your introduction.
Okay. But that's exactly what I was going to ask you. So the $65,000 a month, that's what you're targeting for G&A, is that it?
Yeah, I think that's pretty spot on, actually. Yeah, so we're around about that mark. But as I say, the 10% fee easily covers that. But we are doing other things. We're looking at new opportunities as well. So there's an element of expenditures associated with that. So
Well, you can't just tease me by telling me you're looking about opportunity, not tell me what kind of opportunity. What are you looking for?
we're always looking. We're always looking out for things. I mean, the key criteria for us, the targets have to be big. We're looking for something that will appeal to an Anglo Gold or a BHP or an Anglo or somebody like that. But we're looking for something that's got the potential to deliver a tier one discovery, and ideally something that's on open ground. We don't typically do third-party deals for the most part within our group, and
Mm.
so we like big exploration concepts on open ground, and I think with Inflection, for the most part, we're looking for copper gold in Australia.
Hmm.
So think of it that could be copper, could be gold, but we're not going to go off, I don't think, chasing things like greenstone hosted gold in Western Australia, things like that. We like the copper gold theme.
Well, but you're narrowing yourself very narrowly, if you will, like the tier one open ground, Eastern Australia. There's not that many options, are there?
You'd be surprised. I mean, it's a big place. There's a lot of Australia that's free of claims, and there's a lot of Australia that's got a big blanket of post mineral cover as well. So if you're prepared to get your head around exploring undercover, there's actually a lot of interesting areas in Australia that are prospective for copper and gold.
Okay. Interesting. How many, just before we move on to talk about maybe Queensland here in a second too, how many targets is Anglo going to drill before choosing their 5? Was that predetermined as well?
So the plan is to execute on the whole phase 1, and there's about 35 principal targets within the portfolio. Now, within those 35, it's not so black and white. There are multiple targets within those individual targets, if you will. So the plan is to fully execute the program to poke scout holes into all of the major targets. Once that's done, Anglo then retains the right to select up to 5 individual projects, which you may take to phases 2 and beyond. And as you mentioned in your introduction, it's sort of 27 million Australian dollars to get to an initial 65% interest on each of those projects. Now, we don't know how many Anglo will select, if any. We've got our own thoughts how that might play out, but yes, it's completely within the rights of AngloGold to do as much or as little as they choose.
Is there an option for me to hear those thoughts that you guys have?
No.
Fair point.
I mean, I can't speak on behalf of AngloGold. We've had internal discussions in terms of which projects they might be interested in, but I can't go there until we hear officially from AngloGold. I don't want to speculate.
Got it. Yeah, I don't want to place you in any uncomfortable situations here in terms of compliance and stuff like that. Good. Let's go back to what else you were doing. You said you're looking for opportunities. You have the Queensland projects. Do you have money and desire to do anything in Queensland this year?
So there's no immediate plans to do anything in Queensland this year. I mean, really, the story, to be honest with you, Antonio, is about 95% New South Wales. We're really focused on that. We did complete a handful of holes at the very end of last year into the HEREIN project. I think it was 4 holes, and that was funded by a grant that we received from the government of Queensland. But we'll get to those assays here shortly, and we'll talk more about HEREIN over the coming weeks and the way forward there. But really, the focus has been these big copper gold targets in New South Wales. Queensland also, you deal with a fair degree of seasonality, particularly up where we are in the far north, and we're called Gulf country. It's very, very wet until about May there. So it's you can work, but it's very challenging just because of the heavy rains and whatnot.
Right. Okay. But so if you can cover G&A with that management fee, you're not planning any big work this year. Does that mean you only go back to the capital markets if there's something larger, something strategic that you want to get involved with, or do you just not go back to the capital markets?
There's no plans to go back to capital markets right now, and we're happily just with working away with AngloGold and taking things forward, and the management fee, as you mentioned, covers our G&A. So yes, look, if there's a new opportunity that we need to raise additional capital for, we'll do that, but we've certainly no plans to do so for the foreseeable future.
Okay. How do you plan on telling the story going forward in terms of from a marketing perspective? The junior market seems to be sort of waking up, which is oftentimes good time to sort of gather people in the woods to hear the tree fall when it does. How do you do that?
Yeah, it's mostly through, frankly, like platforms like yourself. We do a lot of online sort of discussions and interviews and things like this. So the guys are fairly active on social media, getting the story out and whatnot. And having AngloGold as a partner certainly has helped help the story. We do have analyst coverage from Michael Gray at Agentis Capital, which has been wonderful, and also Joe Mazumdar at Exploration Insights. And Joe was recently on the property, as was Michael, actually. looking at core and the lay of the land. And we also have coverage from Eric Coffin of Hard Rock Analyst as well. So we're fairly, aside from sort of the third-party research, we mostly just do online marketing. We do 2 or 3 conferences a year. We'll speak to, but apart from that, we're fairly low key.
Right. So I think what kind of conferences are you doing? I think I met you guys in Switzerland, if I'm not mistaken. I know you do the MIF, given that you're with Joe and Eric. I know they do it each year. What else?
Those are the ones, actually.
Hmm.
Those are the 2. We attend Beaver Creek as well, the
Okay, good.
precious metal summit and things like that. But for the most part, yeah, it's really we'll do the Metal Investment Forum, and we tried the Swiss Mining Institute this year as well, as you're aware.
Good. Well, Alistair, my clock says that you have to go here in 2 minutes. What am I forgetting to ask you? What did you come here hoping to talk about, but I'm not bringing up?
Well, I think we've touched on it already, but it's really the fact that everything we're drilling is 100% owned. You know, it is a huge land position, as you mentioned early on, and we're testing very large targets with the potential to deliver tier 1 discoveries. And it's kind of an unusual strategy, you know, testing lots of targets, lots of holes. We're aggressively drilling, and it's all fully funded by Anglo Gold. So that's really the key thing, the scale of the targets and the price. We're looking for another Cadia or North Parks or a Cowal. These are huge, very profitable copper gold mines in southern New South Wales. And you know, we're having a real go, and we're doing this being fully funded by Anglo Gold.
Good. Well, thank you, Alistair. This is that's an interesting time in the company's future, an interesting time in the markets too. So please do keep me up to date. I'll make sure to get in your mailing list, but not before I've spoken to you, John. This kind of been in the making for a little while now. I'm trying to get this interview together, get a time that works for us both. So I appreciate you being here, and I'm of course, talking for people listening, I'm talking about John Black. He's the CEO of Regulus Resources, a copper gold development company with assets in Peru. Company's listed on the TSX Ventures Exchange and it'll take a symbol REG, so REG. We're an average of about 74,000 shares trade each day with a 52-week high of $1.60 and a 52-week low of $1. Oh no, of 69 cents alone. So that would have been weird. Anyways, market cap just of about $190 million right now and about 125 million shares outstanding. That makes this about a $1.55 stock, I believe, last time I checked. Let's call it $1.50, depending on the time when you're watching this. So right up there, close to its 52-week high. Adding the little options left on the table here, and that gets us to 136 million fully diluted shares. There are a couple of names on the share registry that you would recognize, including a 16% ownership by Rio Tinto and an almost 22% Route 1 ownership, with management owning about 11% of the company. As of the last interim financial statement, which is dated December 31, the company had about $16.7 million in current assets, about most of which, the vast majority, $16.5 million of which was actual cash. The cash sat on a balance sheet against short-term account payables of about $770,000 and no long-term debt outside of the decommissioning liability that that companies are required to build here. That statement tells me that Regulus spent, on average, over the last 3 reported months of fiscal 2023, about $190,000 per month on operational expenses. That includes travel, management, marketing, conferences, legal fees, and so on and so forth. And they spent about $330,000 on exploration and evaluation, with the majority being spent on labor and field operations. Overall, that's a G&A, that's an exploration to G&A ratio of 1.73, which means that G&A represented about 36% of the overall cost here. And remember, this is only that snapshot of a 3-month period. So please do head over to the company's website as well as setterplus.ca to look at the most up-to-date numbers and official news releases for yourself, because this is obviously a non-revenue generating company that relies on public markets, which means these numbers might be different by the time you're watching this. Boring stuff aside, though, this is a well-known development story, so I won't annoy you with too much of my voice here. No barbecue analogies in this one. Regulus owns the Antiquary project, which is at an elevation of about 3,500 to 4,000 meters, reachable by a paved road, and also right next door to 2 operating mines. Interestingly, And this is an important part, as you see furthermore in the conversation, but that's going to be an oxide heap leach mine expected to turn into a sulfide mine sometime after 2027, as well as a sulfide mine on the other side that runs out of tailing space in 2025, which means that the mine will be closing down if Goldfields, the current operator, doesn't find more ore. Wink, wink, cough, cough. Now, when I say that Antiquary is right next door to these mines, I'm not joking. Like, it's right next door to it. You're probably seeing a map on your screen right now. But it is believed that Antiquary shares its deposits with the Tantahuate project. That's a mouthful, but that's the one that's currently mining oxide gold, but will start mining sulfide soon. As again, you can probably see on the screen right now. So this is one deposit basically divided by humans, not divided by nature, and named by humans as the Tantaquary deposit, which is a better name than the one I mispronounced just 7 seconds ago. The 2019 resource estimate here shows a strip ratio of below 1 and 2.3 million ounces of 0.3 grams per ton gold, 61 million ounces of 7.5 grams per ton silver, as well as 2.6 billion pounds of 0.5% of copper in the indicated category, and a comparable amount of gold, copper, and silver in the inferred category as well. So basically, yeah, you can practically double it, I suppose. There are metallurgy question marks maybe that we'll have to get into further on in the conversation, as well as other considerations around the geology and the potential expansion of this project, as well as obviously the corporate accountability of the two companies, and then the royalty aspect of it all. But again, I won't bore you to death with all that right now. Oh, and John, actually, this might be a good point for us to kick off the conversation. What is the royalty? What's the royalty situation on the project as we speak now?
Well, as you mentioned, we have about a third of this very large copper gold sulfide deposit. So we have 1/3, and the other 2/3 is held by the Comalaiche joint venture, which is Buenaventura Southern and a company called Espro that are operating the Tantuatai mine, which is mining the oxide cap over this very large copper gold sulfide deposit. Our land position is one that was assembled from a lot of old mining claims. And so there are variable royalties on these that range up to 2%. But in many cases, we have the ability to buy those back. We've also established a very creative agreement with the Cisco Gold Royalties. We consider, in addition to Rio Tinto and Route 1, we consider Cisco Gold Royalties to be a strategic partner for us on this project. They don't own an equity interest in the company, but they have provided us with funds to advance the project in exchange for a rather creative deal that was put together by Adam Greening, our Senior VP for Corporate Development, whereby if we buy back a royalty from one of the underlying royalty holders, Cisco Gold will pay 3/4 of the acquisition cost. We'll pay 1/4. They get half of the royalty, and the other half of the royalty we extinguish or remove. So we're systematically going through and discussing with the underlying original claim holders about acquiring these royalties and effectively cutting them in half. In a strange way, we have an agreement with a royalty company whereby they pay us money to reduce our royalty and formalize the remaining royalty into a modern royalty held by Cisco. So it's a pretty creative deal. So not an excessive burden at all, and one that's being reduced through this agreement that we have.
Well, I've been looking at obviously your group and what you're doing, including your work with Aldebaran and whatnot. I've been thinking, wouldn't there be a possibility for you to maybe spin out a royalty company or something like that, where it's all the royalties around the companies that you're involved with, sort of put into one company, just something more creative of that nature? Is that a possibility that you'd explore?
There's always a possibility on that. That's increasingly being sought by groups doing what we do, is that as part of a transaction, we're asking a major mining company to acquire a deposit from us to invest a large amount of money to put it into production. So there's a lot of risk on their standpoint on what they'd like to pay for it, which means that the payment made for a large deposit like this is perhaps not as great as we'd like to see it be. And so then that enters in the possibility of putting a royalty in there as well. We wouldn't rule that out going forward, but currently that's not in our plans at the moment.
Well, yeah, you're right. I suppose in the plans for the moment, the most viable path forward would be with Tantahuate. I mean, just basically combine the company, right? That's the entire idea.
Well, there are a lot of different ways. What maybe I can step back and describe our strategy overall, so we can see how this fits in. But we're a group of seasoned explorationists that we've had a long time, as you can tell from my hair, a few decades wandering around in the Andes. And so we have a awareness and knowledge of a number of interesting projects in the Andes. So our strategy as a junior company is to identify projects that have potential to be extremely large copper deposits, and not just large, but also economically robust. And so we're looking for a prize that would be of interest to a major mining company to acquire from us. So our strategy is to identify these projects before they're fully revealed, acquire those, drill those out, show the full size potential of the project, and then de-risk it through about a pre-feasibility stage. And then ideally, we sell that project to a major mining company when they're looking for opportunities to go forward. It's a strategy that's been well employed by Ross Beatty and his Lumina Copper Group, the Lundin family, a number of other juniors have operated in this manner. So it's one that Regulus is actually our second of 3 companies we've had with our same management team. Our first company was called Antares Minerals, and we made a similar nice copper discovery in southern Peru that we drilled out and sold the first quantum for $650 million in 2010. So we've executed this strategy once. As a part of that sale, we spun out Regulus, which is now back onto a really interesting project. It's a big challenge for us to identify these projects. They're more and more difficult to find out there. So we feel very fortunate that in Regulus we have our hands on a very nice project. We in parallel run a second company called Aldebaran that's on a very nice project in Argentina as well. So we have 2 companies, each of which have their hands on a nice large copper or copper gold deposit. And then one of the other important elements in this is we can have a great deposit. We can be in a good position to advance it to show the full potential, but we also need to be in the right moment in the market. And what's really exciting for us right now is that we're seeing copper price rise. There are a lot of groups that are predicting significantly higher copper prices over the next few months or years on this, as there's an increased demand for copper for electrification of just about all aspects of society right now as we try to reduce our carbon consumption in the world. And so we're kind of entering into that sweet spot where copper prices go up. The type project we look for doesn't need a higher copper price to be viable, but when prices are high, the copper companies are producing a lot of profits, and they're highly motivated to look for growth avenues, and that's when they start to acquire deposits. So I think our timing is very fortunate right at the moment that we've put our hands on a project. It's one that's advanced to the stage where groups can begin to see the full potential of the project, particularly when combined with what our neighbors have. And we might be entering into a spot where major companies are highly motivated to acquire an interest in such a project. So it's a complex project, as we've discussed, but it's a heck of a prize on this one, and I think the timing's working out pretty well right now.
That's something that I obviously want to talk about, sort of the strategic aspect behind it all and the relationship between you and those neighbors. And I'm mostly wondering about how much information about them and their operation you're getting, and how much do they share with you when you guys talk? Because it's harder for the public to get as much information on them, right? So that's where I'm coming from.
Yeah, and I have to understandably be cautious because we have confidentiality agreements. Typically, is the relationship we'll have with a group like our relationship with the neighbors or other groups that are evaluating us as we move the project forward on this. So I have to be a little cautious on what we can do. But what I can do is point to agreements that we've had that have been publicly revealed in the past. So when we acquired this position, we picked up a piece of ground that was tucked right next to an operating mine. And it was a very interfingered line position, not even a simple straight line boundary between our groups. So there was an immediate challenge on whether we could even get access to our ground and drill it to go forward. So we entered into a rather unique agreement with Comalaiche, the joint venture that operates the mine next door to us. It's probably best described as a collaborative exploration agreement. It was an agreement whereby they did not earn an interest in us, nor did we earn an interest in them. We simply agreed that we would share data across the boundaries so we could each see what was going on next door. We would share access So if we needed to drill our ground by passing through their ground, we'd have permission to do that. And that was a 5-year agreement, and that allowed us to drill out our deposit. And you might ask, why were they so nice to us? Why did they agree to this? In exchange for that, they received the rights to lay their operation back onto our ground. So we don't have oxide mineralization of significance on our ground. That's mostly on the high ground next door. But they had some of their mineralization trapped. They couldn't get to it if their pit didn't lay back onto us. So we allowed them to lay their pit back onto us. They paid us a royalty for any gold that was produced from our ground in exchange for us being able to drill our deposit out and see what we have. And that allowed us to better understand the overall district. So that's an example of an agreement that's out in the public. We interact with them regularly. We're immediately next door to them and share a lot of infrastructure. So we coordinate our activities with local communities and other things going on. There's a high degree of communication between us and primarily Buenaventura as the operator of the joint venture next door.
What I'm wondering, what I'm thinking about here is the information parity between you and Buenaventura, because I'm just basically wondering who's got the information upper hand, if you will. Like, can they sort of waiter you down, wait for years and years and years before committing to something, so that because you're a public company and because your share price dictates a big part of the health of the company, if you will. So that's where I'm coming from with these questions. That's what's going around in my head.
Yeah, you're hitting right into the heart of our challenge right now, is that we really kind of already know what we have. They have a pretty good idea of what they have on their ground. The clock is ticking a little bit in that the oxide mine does run out of ore in a few years. And the easiest opportunity is to make a transition into a much larger copper gold sulfide deposit. And you don't do that from one moment to the next. So that needs to be started soon. And certain elements of it are already underway on either side of the property boundary right now. So that's provides a lot of motivation for us to go forward. There is the possibility that they could close the mine and starve us out and wait on that. But I think that's countered with a missed opportunity on their part. Really, we believe the best way to develop the project going forward is some type of a consolidation of the district. And then that allows the flexibility to design an optimal mine that is most profitable moving forward, and a larger scale project moving forward. If you are constrained to one side of the property boundary or the other, it means that you may be developing a project with less return for investment on it and jeopardizing the overall development. So it's very logical to move forward, but as you can imagine, it's quite a chess match right now in terms of how does that happen. They're a joint venture of 3 companies of very different sizes. We're a junior with a strategy to monetize our interest, and it would be logical to assume that a lot of major copper and gold companies are taking a close look at us right now to see if acquiring our part of the project might make some sense and how that would go forward. So there's quite a chess match going on. I can't get into the details of that by any means at all. But it's certainly one that will be well on the radars of most major copper and gold companies that are looking to acquire these type of assets moving forward.
Could you get into maybe some of your hopes or speculations about a timeline, though? I think initially you had expected this to happen quicker, but how do you feel now? Is this more of a 1 to 3 year thing, or 3 to 5?
In this business, you're always expecting it to happen more quickly, and investors naturally would like to see a return more quickly, but it does require a little bit of patience for everything to come together on this. As I mentioned, we do have certain elements that kind of give us an idea of when we're entering into a window where something's more likely to occur. One, the mine next door is running out of ore in a few years. So that really means that the smoothest transition on this would be finishing off those oxides and then making a transition into a much larger, what we call a multi-generational mine. It's one that would last for 40, 50 or more years. So it's going to provide a lot of benefits for the communities in the area. If the mine next door closes, the mine and the Cerro Corona mine of Goldfields, which is 7 kilometers away, both are reaching the natural end of their mine life. And both of those mines provide a lot of benefits for the communities in the area, either with direct employment or indirect benefits from service provision and items like that. And so the communities benefit from those. If those mines close, that's going to stress the local communities quite a bit. But there's a very nice solution here of making this evolution into a much larger mine that lasts a long time. So it would work out very well socially with the communities to make this transition. And it's always easier to make a transition from an operating mine to a larger, different style of operating mine than it is to close one and then face closure costs and then restart the whole process again of permitting to go forward, perhaps with communities that are upset that they've been through a boom and bust cycle. So there's a great opportunity for this to move forward, and almost all of us involved in the process right now realize that timing is important. So that I think makes it more likely that something will happen in the district relatively soon. As I mentioned, rising copper prices and gold prices were at all-time highs on gold and nearly that on copper right now. Also move us into the time when people are looking to put projects like this into operation moving forward. We know a lot about the size of the deposit between ourselves and the neighbors on it. So it's entering into that moment that we usually think of everything's kind of lining up and being the right moment to move forward. We're also seeing the emergence of some additional players that can be visible in this moving forward. We've mentioned that Buenaventura is the operator of the project next door. They have 40% of the project and operate. They've recently had Antofagasta Mining acquire 20% interest in Buenaventura. And so they're doing that as a large copper company, primarily interested in the copper assets that are held by Buenaventura. So that's revealing their interest in the process. So that's an interest in Buenaventura overall, but they certainly are well aware of this project and the potential that it has moving forward. So all of that is creating a situation where I think we have to be careful about throwing out time frames for everyone on this. But I think we're really looking at in the next year or two well, that's the opportunity for all of us that are involved in this to make this transition into a project that will provide benefits for any company that remains in the project, any company that decides to monetize their position, and particularly for the communities in the area. We really want to maintain that social license in the area by providing long-term benefits for the community. So I think this one looks more like it's the 1 to 2 year range, and certainly not the 3 to 5. But that there are a lot of major worldwide events that could control metal prices and other sentiment that we always have to be aware of. But this one is closer than farther away.
And we have to be stoic about this, and you control the controllable, right? In this case, but when you mentioned a couple of years that they run out of ore in a couple of years, like, is that in the literal sense in 2 years, or when did they actually run out of ore?
Well, what always happens on an oxide, most operations, but particularly an oxide operation like this, as metal prices go up, you reevaluate what your cutoff grade is. And so an increasing metal price perhaps can extend a mine life for a little bit. You can always reprocess material. You can always extend that out. But in most cases, when you're reaching that situation, your production's dropping off, your employment's dropping off, the profitability of the operation's dropping off. And so it's best that you go to Buenaventura's public information on this to see what their latest prediction on their mine life. But we're talking 2 to 3 years is generally what they've been projecting in terms of remaining mine life on the project. There's a little more information on Cerro Corona nearby, and in less than 2 years they stopped mining from their pit, primarily because, as you mentioned, they run out of tailing space, and then they pivot and they begin to backfill their pit with tailings, and they process low-grade stockpile ore. So at that point, they'll see a big drop-off in their production and a big drop-off in the employment opportunities at the project, because they'll no longer be mining, they'll just be processing stockpile materials. So, and that leads to an eventual closure of the mine by about 2030. So I think all of us working in the area would really like to see an opportunity for people to continue to work in the mining industry and receive the benefits from a large, modern, safe mine in the area going forward. So we do this as a business, but it's also important for us to see that the results of our work provide long-term benefits for the people in the area we're working.
And forgive me for asking maybe that many questions about your neighbors specifically, but I'm sort of trying to understand obviously their angle of the story here, because there's basically two major events that I wrote down for them. They're planning, if I got that correctly, they're planning an economic study by the end of this quarter. And then there's also the Antofagasta involvement. How do you think these two things, related or unrelated or combined or uncombined, how do you think they complicate or maybe even make things easier for you to close a deal here?
Once again, I do have to be a little careful on what I say on it. So I'll refer to public information on what they have out there is the best I can do. So I'd advise people take a look at what they're revealing publicly, and interpret that the way they do on that. But I can say that having Antofagasta step into this is good news in most senses, and that it reveals the potential. Antofagasta wouldn't be taking a position in Buenaventura if they didn't feel that there was a lot of potential in their portfolio overall. Buenaventura has many projects, most of which are precious metals or lead zinc projects, but they have some notable copper assets in their portfolio, and that is most logically what Antofagasta would be interested in, is their copper assets. Not exclusively this project; it's one of several that they have.
Right. Okay. But it doesn't necessarily complicate the relationship between you and Buenaventura, given you Rio Tinto and them Antofagasta, like sort of a battle of the titans.
Well, and then we have Southern. This one's a remarkably complex chess match on how it goes forward. But what I usually do in a situation like this is drop back and take a look at what the asset is, and we could all position and try to do things and not make a decision to go forward, and we would all lose on that proposition. So the most logical scenario here is that there's a consolidation of the project moving forward, and that's just such a compelling story there that I have confidence that will happen. Now, how it happens, there are a lot of different pathways this could go forward, and it'd be irresponsible of me to telegraph or indicate a certain thing on this, but we're exploring all avenues to fundamentally what we look for is what's best for our shareholders, and our shareholders are aligned with our strategy of we don't necessarily want to become a miner go forward. This is a bit of a different case on it because we believe strongly this will be a very large mine moving forward on this. Is that you mentioned the idea of a royalty or something like that. We're open to ideas on what's the best pathway forward, but we're conscious that most of our shareholders would like to receive a return on their investment sooner than later. So the most logical scenario would be that we would sell our asset to one of several interested parties in the complex dance that we're involved in here.
Are there any comparisons that you can give me, maybe geological, but also corporate comparisons where that happened in the future, like a comparable deal happened in the future? Just something to sort of wrap my head around how this might look like. That happened in the past, not in the future. I'm sorry.
This one's a bit unique. It's a bit different. But one thing I can point to on this is that increasingly we're seeing these large projects that we intentionally look for. Even if there's 100% ownership of the project, it's one consolidated unit. We're increasingly seeing these projects being developed by a consortium of majors. So Antamina would be a good example, where you're seeing multiple large companies pairing together to move a project forward, and that's just sharing risk. A lot of times, these projects are fantastic deposits that last, as I mentioned, for decades and decades moving forward, but they require a large amount of capital to develop, and so it's increasingly common that we're seeing multiple major companies team together. And so our position could be of interest to a group to participate with others in the project. I doubt that there will be one company that manages this whole project. It'll most likely be several major companies with the capital that's required to develop it to the most optimal scale on the project. And it also opens up the possibilities. In many projects like this, we see companies that are non-traditional operators, but want to have participation in a project. So you could imagine any of a number of the Asian smelting companies that like to participate in a project, but they're not a natural operator, but they can provide capital to develop, and they partner well. You look at most major copper deposits, and it's not uncommon to have a Japanese smelting company financing part of the project moving forward. So it's those type of relationships are possibilities as well. So we don't have to look to say one company consolidating the whole district. We could look at some participants in the district now would quite likely like to continue in the project. Others like ourselves, it's not our natural wheelhouse to do that. And so it would be more logical that someone replaces our position and brings the capital to come forward. There's also an interesting twist on this one in that even though it's dominantly a copper project, probably 2/3 of the value in the project is copper, there's very significant gold involved in this. So just the portion of the resource that we can announce, that's over 4.5 million ounces of gold as a secondary product in the project, just to put some scale to what we have. And we only have maybe 1/3 of the overall project. So you can see this is an extremely large gold deposit that happens to be in the same place as an extremely large copper deposit. So that opens up the possibilities of maybe a copper company and a gold company teaming up on it. There are a lot of different angles this could go. So we're going to have a very fun year in front of us right now as we navigate through the best way to maximize the value for our shareholders on this.
I think you bring a very interesting point here, is that a lot of times these things, you look at them sort of with hindsight and you think like, oh, that makes sense. This consortium of companies there makes sense, but you wouldn't have come up with it in almost any way if you tried to think about it beforehand. And so it only really makes sense after the fact, because a lot of things happen below the surface that, typical sort of internet plebs like myself don't necessarily get to see. But I appreciate the overview there, John. I don't mean to push you any further or put you in any sort of.
No, I understand everybody's natural, and I wish I could talk about everything that's going on. We just have to respect confidentiality and be careful about what we say.
Of course, yeah, and I won't put you in any compliance troubles or anything like that here. Let's talk about what's happening then on your side of the story. News on interesting metallurgical work happening there. You doing more of that in 2024, or what do you think?
Yeah, we've entered into an agreement with Rio Tinto and their Newton division. And for your listeners that are maybe not familiar with this, when we look at a very large copper deposit like this, there are two general styles of mineralizations. One's what we call secondary mineralization. It's weathered, it's partially remobilized mineralization near the surface. And then there's primary unweathered material at depth. And the secondary mineralization you can process by heap leach technology. So you take it, you put it on big pads, you leach it with a sulfuric acid solution, and you produce pure copper cathode on site. So it's a very low cost way to process material that produces copper on site. You don't involve a smelter, you don't involve the transportation of getting a concentrate to a smelter, you don't have tailings. So if you can, you process material that way. But the bulk of the mineralization in a big copper deposit has always required milling and concentration in producing a concentrate that then is transported to a smelter that's often across an ocean from you. So it's much more capital intensive moving forward. Rio Tinto believes that they've developed technology that will allow them to heap leach the primary mineralization as well. And they've packaged this into a new group in the company called Newton. And they're commercializing this, and they've begun to enter into agreements with a number of companies like ourselves to test this technology and see if they can apply it to the projects we're involved in. So if they can do this, it can take a project that's already a quite interesting looking project and make it much more interesting because it reduces that capital cost on the project. It has some very interesting potential ESG benefits to it as well, in that if their technology works on the project as well as they believe and we believe it'll work, it uses a lot less water. It uses significantly less power per unit of copper produced. So it's very, very exciting for us in the copper space that copper is viewed as a green metal. It's viewed as an important part of the solution to moving to a lower carbon future via electrification of many aspects of society right now. But mining copper is carbon intensive. And so if there's a way that you can mine copper more efficiently, more friendly in an environmental sense, then that makes tremendous amount of sense, and particularly when it allows you to do it more profitably at the same time. So this technology has some extremely attractive potential benefits to it. It also sequesters or stabilizes arsenic that's in the deposit into a non-soluble form, which which solves one challenge we have on the project as well. And you don't produce a tailings, and tailings are a costly component of a large milling operation to manage, to make sure that you have your tailings contained and you don't have a tailings disaster in the future going forward. So this technology, I think, offers not just for our project, but in general in the industry, offers some pretty exciting potential. Most major copper companies are pursuing their own version of this. Rio Tinto just feels that they're farther along on this and have decided to commercialize it and go forward. So we're very pleased to be involved with them on this. They put a placement into us, which has provided us with funding to move forward on the project. And at their cost, they're conducting column tests right now to test the material to see if their technology will work on the project. And that program will take to about the end of this year. And when the columns are concluded, we'll be able to publicly release the results of that information. So we're very much looking forward to getting that work completed and seeing, because it'll dictate their interest in the project moving forward. And we think that it could be a pretty exciting avenue on how we could pursue the project moving. So a lot of what we're doing right now is we're not actually drilling anymore on the project. The project's large enough to easily capture the interest. An example of this is our geos are pushing to continue some drilling to the north where we have open mineralization. It'd be great to find more mineralization there, but when we look at it closely, it would be in year 40 or 50 of a mine life. So it really doesn't add too much value to the project now. And we have a sufficiently large project to catch the attention of all the majors at the moment. So much of what our work is right now is focused on working with the local communities, putting ourselves in a position to acquire surface rights that are important for the project moving forward, beginning to take a look at where water comes from. It's not very exciting work. It doesn't produce the headlines that move a market, but it's very important of what we consider the de-risking process of the project. And that type of work makes a big difference to groups that are evaluating us. Because the more of that we do, the more easily they can envision a project moving forward.
I do want to talk about some of the community stuff and maybe a little bit about the arsenic if we have a chance later on. Though I know we don't have too much time left. But so you pay for the tests on the Newton or
no, we don't. We provide the samples, and Rio Tinto at their cost does all the test work.
Because I was just wondering how important that relationship is to your overall relationship with Rio Tinto. Like if you wanted to do a different technology, would that offend them, or would it complicate the further involvement of another major? But as you mentioned, most majors have sort of their own technology, so that's sort of what I'm thinking about.
Well, first, what we'll do is we'll focus on seeing how well it works and what that provides, and that'll probably dictate the logical pathway forward. If their technology turns out to not be the most optimal way to move the project, they will, in conjunction with us, evaluate other ways to move the project forward. We don't need this technology to work to have a very good project. Just conventional milling and concentration and then post-treatment of the concentrate are perfectly viable ways for us to go forward. And most other groups that are evaluating the project don't have the benefit of Newton technology, so they're evaluating it in a more conventional manner. This just has the potential to take a very exciting project and make it even more exciting if it works well. So it's a good example. They developed this technology heavily on a project that they have nearby called La Granja. And so the technology was developed on rocks very, very similar to what we have. And so I think there's very good reason to be optimistic that this will work well. And that kind of loops back to your question on timing. We and Rio Tinto would both like to see the results of this because it could provide a pathway to a more profitable development of the project going forward. And we'll have those results by the end of this year, which kind of coincides with what I mentioned of timing of the remaining life of the oxide mine next door and the importance of making that transition. We're seeing all of the key components of information that we'd like to see come to fruition. The last missing piece we'd really like to see is to have a more robust copper price. Not that we need that price, but that price generally motivates more M&A type activity in our space.
Right. Given the grade of the deposit and the scale of the deposit too, as far as I understand it, the arsenic that you have in the sulfide cover there is not necessarily, I mean, it's obviously not a major issue, but it is an issue, right? And so
it absolutely is. And when we take on a project like this, our strategy on this is to identify the biggest challenges that are there and then understand them and develop solutions for them. And when we first entered into this project, arsenic was the potential Achilles heel of the project.
Yeah.
There were two really, arsenic and the complexity of the land situation, which we've talked about quite a bit. It's been very interesting in that it's taken us a while to mature this project and get it to the stage that we're at right now. But in that time frame, we've seen most of the major companies become more comfortable with managing arsenic in large deposits. It's partly because the arsenic contents in copper project worldwide are going up for the most part. And so smelters and mining companies have begun to face that and develop ways they can work with it. We've noticed, we've actually had groups approach us interested in our project because we have arsenic, because they believe they have a solution. In some ways, that's how Rio Tinto came about on this, because they believe they have a very elegant solution on not only producing a more profitable operation, but also responsibly managing that arsenic moving forward. It kind of ties together rather neatly. But there are other groups, the gold groups overall tend to approach it by looking to an autoclave. So rather than effectively oxidizing your mineralization in big heap leach pads, they produce a concentrate and would put it into a large vessel that under high heat and high pressure rapidly oxidizes the material. It produces much better recoveries overall, particularly for your precious metals, which is important to them. But it comes at a very high capital cost to develop the project. So it's a trade-off between the cost to do it versus your recoveries. And there's this interesting approach from different ends on how you do it, which roughly breaks out to in general, the gold guys think pressure oxidation or autoclaves, and the copper guys think conventional with post concentrate treatment of it to eliminate the arsenic issue, or interesting opportunities like Newton on where you may be able to do that through heap leaching. So there, it's much more. We receive very little. It's not an impediment to interest to the project right now, the arsenic levels we have, which 5 or particularly 10 years ago, it very much would have been. And now it's much less so. And there are similar projects elsewhere worldwide that are being developed that face the same challenge we have on arsenic.
I'm sorry for jumping through topics here, John, but I know that you almost have to go, and I appreciate the arsenic overview there, because I think it's oftentimes swept under the rug by people saying, "Oh, it's not a problem, don't think about it." So I appreciate
we like to wear them right out front. The challenges on the projects you put out there, you have to have them solved, or people are less interested in acquiring the project from you.
That's right. Are the locals one of those challenges? And why I'm asking you is because there was recently an attack on the infrastructure at the Poderosa gold mine in Peru. Not much of a comparison there besides it being in Peru, but there's also been a long history of upheavals, if you will, for mining companies in Peru. So how is that influencing your communications with the locals?
Well, it's the relationship between stakeholders, communities that are nearby to the project is always one that we have to carefully manage. And it's not unique to our project. It's true of projects worldwide right now. And even in cases where it doesn't look to be a big deal, it's still something you need to be very much concerned about. So We live the project. We live. I guess I live at the project. But the project is an area with not much agriculture right in the project area itself. It's higher ground, so it's not apt for agriculture. So we don't have people living on the project. We don't have very much grazing of animals there, so it's good in that sense. But nearby the project, we have a large number of people living and depending primarily on agriculture as a means for their lifestyles. And so particularly in the area that we're involved in, dairy farming is an important part. So it's artisanal production of cheese and yogurts is an important part of most people's lives. So they're naturally concerned about having a large mining operation nearby that could potentially affect the quality of their water or prices for their products and other things. So what we try to do is establish a relationship with these communities to help them understand what we're trying to do and the benefits it can provide, either through employment for people, make sure that they're comfortable that what we are doing or what we're projecting will be done on the project can be done without significantly impacting what they're doing. So a lot of what we spend time with now is just making sure people understand us, making sure there's open communication, making sure that they're seeing that we can provide benefits for them to go forward. And often in a case like this, it's work, but it's manageable work in the immediate area of the project because people can see those benefits more directly. The bigger challenge sometimes is slightly farther away. And people that live 40 or 50 kilometers away from the project aren't close enough to the project to receive direct benefits from the project, but they can be jealous of what's going on. And so that you have to make sure that the broader context is good for your project to move forward. So, and that quite frankly is a challenge in Peru at times because it's often presented as a concern over environmental issues or water issues, but fundamentally it's people positioning themselves to protect their lifestyles and make sure that something's not threatening their lifestyle or they're receiving the most benefits they can from it. And so we work a lot on this. We try to do that in conjunction with our neighbors. And keep in mind, it's not just the two mines immediately next door to us. Newmont's Yanacocha operation is only 35 kilometers away. So we're in an area with a lot of historic mining activity, and so there's a lot of coordination between the companies to move forward in that sense. Poderosa is kind of a different situation in that they've had a long and complicated history with informal or even illegal mining. And that has a lot of that conflict is a very special case related to that project.
Yeah,
so.
Kind of you to call it informal. What about the higher level there, sort of region wise and maybe national politics wise? How's that sitting with you?
Right now, well, Peru, it's important for people to understand that Peru is a mining country. So like other mining countries, say Canada or Australia, mining is an important part of the country overall. So there's good awareness of it and the potential impacts and the challenges that are associated with it. But fundamentally, mining is well established. There's good precedent for how you go about developing a mine, how you move forward. And it's interesting right now, and that as we've come out of COVID, knocked around economies worldwide on this. As we've come out of COVID, the Peruvian economy is not returning as robustly as the government authorities would like, and everyone would like to see moving forward. And so the current government is very concerned about improving the economy. They're not seeing their GDP increase at the rate they would really like to see. And they fully understand that mining is one of the principal motors that can allow that to happen. And so right now you'll see at PDAC or other worldwide forums like this, a lot of discussion by Peruvian mining authorities of the importance of creating a situation to allow the development of additional mines to improve the economy of the country overall. And they're focusing very much on the trickle down effects that happen when you construct a large mine. Obviously, it provides good employment for a lot of people directly associated with the mine, but it provides a lot of additional benefits coming out from there, including the tax benefits that are provided to everybody that lives in the area. And so we're seeing in Cajamarca, the province we're in particular, it's been a province that, particularly over the last 20 years or so, at times has been a bit anti-mining almost in some sense. But now, as they're seeing mines like Yanacocha kind of wind down and potential closure of Tantuatai and Cerro Corona next door to us, they're realizing that they really would like to have the financial benefits from those projects moving forward. So new administrations, the governor and his team in Cajamarca are very much embracing the responsible development of mining to provide benefits to everyone moving forward. And at the federal level, they're pushing that very, very actively right now. There are also some just some natural competition going on, in that they've been the #2 copper producer for quite some time, trailing Chile distantly, but pointing out that there are probably more opportunities in Peru to develop new mines than there are in Chile. So they have aspirations of closing that gap with Chile. But at the meantime, they recently been surpassed by Conga and so they've fallen to #3. So there's kind of a badge of honor there, where they'd really like to increase copper production in the country overall.
Sure. So are you going to have any permitting news this year from a perspective of communities or anything regional or even national politics wise?
I don't anticipate anything particularly out of the box. I mean, it really needs to be resolved who the future developers of the project will be before we start talking about permitting on it moving forward. So I don't think you'll see major news on that moving forward. If you follow our newsletter and other things, you can see a number of the activities that we're doing on the ground and see what's happening there. We've had some tremendous success in helping the local dairy farmers increase their productivity, which just has direct benefits to everybody involved, and that's been an incredibly successful program for us moving forward. And so that's a good point. They're not sort of news release type events that will move a share price in that sense, but they're incredibly important to the future of the district moving forward.
I agree. I think more companies should do stuff like that. How much of your time, by the way, goes into Regulus versus Aldebaran here?
You bring up an important point. Our same management team manages 2 companies, so we didn't intend to do that. It's tough enough running one company versus 2. But when the opportunity came up to acquire an interest in the Altar project in Argentina, Route 1 is one of our principal backers, and some of our other shareholders have always encouraged us to watch for additional opportunities out there. These beasts are increasingly hard to identify and capture. And so when we flagged that as a potential opportunity, they provided funding for us to acquire the project. And at that time, it was best for us to split into 2 companies. In 2018, some of our Regulus shareholders loved that we were working in Peru, but were very uncomfortable investing in Argentina. It wasn't a mining country. It wasn't so clearly a place to be involved with. That's switched dramatically now. Argentina is emerging as a new potential mining center going forward. But it was best for us to split into the 2 companies. So the amount of time what we did is we just increased our bench. We increased our management team by bringing on our first time around, Kevin Heather, who's our Chief Geologic Officer, and Mark Wayne, our Chief Financial Officer, and I really were kind of running a pretty tight ship on moving forward. Now with the 2 companies, we've added some additional components that make us a stronger team, and we have the benefit of flexing people back and forth between the 2 projects. Personally, I'm probably more involved in Regulus, mostly because it's more negotiations, it's more strategy, it's more moving forward. Our technical team is more involved in Altar, in Argentina, where we have 4 drill rigs active. It's much more active in terms of an exploration project, but that varies over time.
Good. Well, John, I really appreciate the overview here. I understand that you have to go, but again, I'd be happy to keep following along with the story and getting updates. So thank you so much for investing your time in me. What am I forgetting to ask you here, though, at the end? What did you come here hoping to talk about, but I'm failing to bring up?
I mean, probably the biggest event that's happening right now that many investors need to be aware of is that we're finally seeing this shift to more positive investment environment in juniors, and particularly in the copper space. As it's been interesting for us over the last 2 years, really, where we have a lot of interaction with major companies, and they're very motivated to be looking for new projects moving forward. Rio Tinto, we have a strong relationship with them, and I can point to their public disclosure where all the way up to the CEO of the company are telegraphing they need more copper projects.
Mm.
And so when we're talking to them, they see what's coming. They see that there's a looming significant shortage of copper production, which will need to be filled to go forward. And so they're highly motivated to get projects, and there's no discussion about the importance of copper going forward. For retail investors, there seems to have been some hesitancy over the last 2 years. When we describe that same situation to people, the logic makes sense. Everybody agrees and says, hey, that's great. But I think everybody's been kind of waiting to see it happen, which is just natural. You don't want to be the first one to start. And you may agree it's going to happen, but you don't know if it's going to happen in a month or if it's going to happen in 2 years. So what I think we're seeing in the last month or two on this is copper's cleared $4. We're starting to see that move, and we've seen a notable increase in our share price, partly due to recognition of the situation we're in with a likely event coming at some point, but also because of this increased copper price. And that's kind of a snowball effect, because what we're seeing now are people that didn't want to buy shares at 90 cents are suddenly interested in buying shares at $1.50 because they see it starting and they see it happening. And that's just a psychological. We see that in markets of many different commodities, that people are hesitant to jump until it starts, but when it starts, it can move very rapidly. So it's a good moment for people to be paying attention. With new all-time highs in gold, we're also seeing many of my peers that focus on gold exploration are suddenly having smiles on their face because there's funding available, and we're starting to see projects move a little bit. So I think we're seeing more of a risk-on environment and more interest in the commodities, particularly copper, but gold as well. And so it's a good time for people to be paying attention and identifying the best opportunities they have in an overall rising market.
All right, John. Well, I really hope you're right on the timing of this. But either way, I appreciate your time, and thank you so much for sitting down with me today. Good. Well, thank you very much for the overview, John. It's all a little bit up in the air now. I'm hoping for an update here shortly. Maybe you can tell me more about that then. Thanks again for the overview, and I'll let you do your job now as I'm traveling all the way to Africa. Many places to be today, it appears. In Africa specifically, I'm going to Namibia, where I'm talking to Bannerman Energy, a uranium development company listed as BMN on the ASX, BNNLF on the OTC, as well as BH6 on the Frankfurt Stock Exchange. No need for an extensive overview here, I think, since Brandon is a repeat offender, if you will, here in the barbecue. He's been here since it was called Bannerman Resources, so that's a while now. Mandatory financial overview here, though, that tells me that running this company from the corporate perspective costs on average about $425,000 a month over the last reported 6-month period, with staff obviously being the largest out-of-pocket cost, whereas the exploration and evaluation cost for those 6 months was an average of about $1 million or $1.1 million a month, putting the staff and G&A cost at about 28% of the total spend over that period. The balance sheet at the end of last December, or at the end of December last year, that's what I wanted to say, showed about $36 million in current assets, the vast majority, that'd be over $35 million in actual cash and cash equivalents. And those are, of course, very rough numbers and rounded up numbers. So for the official data, you will have to head over to the company's website and consult the official ASX statements just to make sure you have all the up-to-date stuff. Project-wise, in very basic lines, Bannerman is one of the world's largest, most advanced uranium developers. They own 95% of a very large conventional open pit to heap leach proposed project with almost 225 million pounds of contained uranium. That's in Namibia at the Etango 8 deposit, which the way I pronounced it, Etango, I suppose gets its name from electric tango or internet tango. I suppose it's supposed to be, you call it a tango or something like that. Not sure yet. About to find out. Large, not high grade deposit. Average grade is about 0.25%. At the current prices of, say, $80 a pound, that's about $42 or $43 worth of uranium in a ton of dirt, with processing yields of about, let's call it 88%, and an expected cash cost of $35, excluding the royalties. That would be for a total production of 3.5 million pounds of yellowcake per year on a 15-year timeline, so a 15-year LOM, for a total post-tax NPV 8 of about $435 million US. all of which again at $80 a pound uranium. Interestingly, that NPV more than doubles at $100 uranium, as you can probably see on your screen right now. And that's basically the gist of it, at least for the Etango 8. But there is more than that to be talked about, since recently there's been an update on that. And Brandon, actually, since you and I last spoke, there have been many news releases. Most recently, that updated scoping study for the Etango XP and the Etango XT scenarios, I guess I would call them. What's all this based on? Why the need to do it right now?
Hey, Antonio, it's a pleasure to be back as a repeat offender on your barbecue. So you're quite right. We released some study work in the last couple of weeks on Etango XP expanded and Etango XT extended. Now, this was a formalization of a lot of internal work that we've done over the last several years. And I think to contextualize it properly, it's probably a quick trip down memory lane for Bannerman investors. We've been at the Etango project since we discovered it in 2006. And initially, because it is a very large ore body, as you said, and because it's a lower grade bulk tonnage operation, which is how we tend to roll in Namibia, the initial thinking was, well, you should develop it as big as possible. And so for much of the company's initial history, once we'd completed the drilling out of this enormous resource and conducted initial metallurgical work, the view was, well, it should be developed at a throughput of 20 million tonnes per annum. In other words, that's 20 million tonnes that gets crushed and then put onto the sulfuric acid heap leaching circuit. Now, that was all well and good when we were in a boom time conditions before Fukushima. And it wasn't so great during the boom, through the real deep bear market that followed the boom. And I think probably the very first time you and I talked on this program, we were still pursuing that very large development phase, but it was at a large capital cost that came with the anticipated production of 7.2 million pounds per annum over initially a 15-year mine life. So since 2019, we really started working on, well, what's the better approach? Is there a smaller scale version that would enable us to get into production sooner with lower development hurdles and then expand as the market develops and as the uranium sector calls for those additional pounds? That was Etango 8, as you mentioned, and 3.5 million pounds at a throughput of 8 million tonnes. So we've brought it down from 20 to 8, always with the viewpoint that we would expand if the market justified that. And what this study done is it's, as I say, formalized and put good quality numbers around what does that expansion really look like. So what we did is we worked on the basis that what makes the most sense is to take the existing crushing circuit and the existing heap leaching circuit and just simply double it. A couple of reasons for that. The first one is that it's a way of producing a study that has very good quality numbers, because the first train of those, all of that equipment and earthworks and so on is done to a DFS level. So it means that although it's a scoping study or a PEA for North American folks, it's got DFS level quality numbers and engineering because we're simply doubling it. The other reason is you do get some capital advantages, because in a crushing circuit, there's a fair bit of capital that goes to spares. So if you imagine our tertiary crushing, it's what's called HTGR, which is it's a grinding roll process, but you've always got to have a spare roll, because you can't have the day it fails and then you're waiting for a roll to arrive by ship for 6 weeks and everything grinds to a halt, you see. But you only need to have one spare between two circuits. So there's commonality of spares, as we say in the industry, and that also helps a lot, as well as singular understanding of maintenance and replacements and just making it a more manageable mine for that reason. So that's why we went from 8 to 16. And I think to answer your question more directly about why we put the study out, well, it enables investors, I think, to look at their own uranium price assumptions. And if they've got a view like we do, that uranium's likely to settle above $80 a pound, investors are able to look at, well, what is this company's future likely to look like at those higher uranium price assumptions. And for example, at 95, we published numbers on a uranium price assumption of $95 a pound, because that would be a very strong incentive to continue and reach a final investment decision on that expansion case.
Okay.
The XT, the extend, was assuming that we don't expand. We stay at the same throughput, the same mining volume. It's just that that initial mine life of 15 years gets extended out to 27.
Okay. What does that mean, XT, by the way? Where does that come from? What's that? Is that an abbreviation or just an
Yeah, and an abbreviation for extend.
Okay.
So you're simply extending the mining life from 15 years to 27.
Sure.
Because the initial 15-year mining life, that involved a mining reserve of 60 million pounds from within 225 million pounds of resource. So it was always very intuitively real that we would extend that mine life anyway. Now we've just added some numbers so that investors can better interpret the potential for this deposit.
Right. And I just looked up what a tango means, actually. Apparently it means sun. So it's like
Well done.
extended sun. Okay. Fair point.
But I did like your other ideas on what a tango might have derived from.
It's
So
just how I
we'll
said
get
it.
you
I
on the
thought like
creative committee next time we need it.
I consistently do this where I mispronounce stuff on here and say them with a funny accent, then it ends up sounding like internet tango or yeah, stuff like that. Anyways, extended sun. I like it. Good. There was no additional improvement in recoveries with this study. So you're staying at sort of 88%, just shy of 88%. Is that something you will aim to get to in the future, or is this number the number that you're going with here?
Yeah, we'd like to think we can improve on that. So that's a sulfuric acid heap leaching. So as you say, it's a conventional open pit with conventional acid heap leaching. Heap leaching doesn't always work so well. There are some good examples of where it's been an ineffective way of leaching various metals out of ore. In our case, we're very fortunate because it does work exceptionally well for the ore body at a tango. And that's some quite unique characteristics of our particular ore body and the particular geological event from which our ore body was created. Now, we didn't expect financiers and other experts to be satisfied with us just saying that to them. So in 2014, we built a demonstration plant and ran that for 6 years. And we had the opportunity to, first of all, prove and establish and demonstrate from the ground up all of the different aspects that you need to satisfy yourself from a metallurgy point of view as to the leaching dynamics. But once we'd done that, we had the time to run through a whole bunch of different optimizations. So for example, we could test different crush sizes, we could test different reagent mixes, we could test different sulfuric acid concentration, different resonance time. Everything you can imagine, we had the time to test and work out. What we found is that we could consistently deliver 92 to 93% recovery in only 22 days. And if you compare that to other heap leaching operations in other commodities around the world, like that is sensational. And that's what makes this project work really well at 240 ppm. Now, what happens then when you take that to the engineers, and we used Wood PLC, which is one of the biggest in the game. They were our consulting engineers who delivered the DFS. They then apply some conservatism to it. So they assume that when you scale it up from this big demonstration plant to a full-size commercial heap leach, something's not going to be perfect. And they apply a formula that brought it down from that 93% down to 87.8. So we'd like to think that once we're in operation, we can show to them and ourselves that we can operate this heap leach pretty close to perfect, which means that it would be higher than that 87.8% recovery. And every percent in recovery makes a big difference to profitability, as you can imagine.
Well, the $95 that you mentioned that you basically need for that final investment decision, that's also something I want to touch upon later on. But just for now, does that number drop when you go from 88 to 93%?
Well, what we find is that the sensitivity to recovery is very high because it's right at the back end of the plant. So you can really proportionately, other than a few very small costs like transport, for example, all of the money's already been put into the processing, the mining and the crushing and the sulfuric acid. So any lift in recovery almost goes directly to the bottom line in the same way that a lift in price goes directly to the bottom line.
Right.
So yeah, so it does have quite a big impact. They're quite substitutable, price and recovery in that inverse way that you describe. And the nice thing is we do experience an NPV lift with the extension from even $65. It's just that it's very pronounced once we've got a price assumption of 95. And for an investor who's running on an assumption of $80 or $95, I think you can look at these numbers and you can pretty much figure that it's a no-brainer that we would be extending with those long-term prices.
Right. Well, that's the thing. I mean, right now, if you say that rounded down to, let's say uranium's $80, you're trading at more or less one-time NPV on a Tango 8. The price goes to $100, which it has been already to this year, and then the NPV practically doubles in that period of time. So if you take the assumption of $100, you're trading at 0.5 NPV. And what I really wanted to get to actually, or where I started this from, was thinking about how it typically goes down. And what I mean by that is specifically the engineering part that you've started since then, because I'm sure there are reasons as to why companies typically go from DFS to seeking financing and then start the engineering work. Because I assume once financing is secured, then you have a higher probability of getting into production than you do now. And then so you have a higher probability of actually generating revenue with this project. And so the risk reward ratio on the engineering work is then tipped way more towards the reward side. On your side, now you're doing some of that engineering work where the risk reward ratio is not the same as it would be after you get the financing. So why the choice to take more of an unconventional approach to production in this case?
Yeah, look, it's a really good point, and it's something that we've obviously chewed on extensively over the last year or so. It's a function of two things, Antonio. First of all, we've got the cash balance where we can, and relative to what we've spent on the project over the journey, the final engineering, so the feed process and then even detailed design, which is what we're ready to start now, those processes are relatively inexpensive compared to, say, the cost of drilling 300 kilometers of drilling, which is what's required to drill out such a big ore body. So we felt that relative to the investment along the journey, it's a good use of funds because it further refines our project and also makes it in the same way that you say, quite rightly, if you're drawing down debt to fund front-end engineering and design, it's sort of lower risk expenditure. But equally, if you've done the front-end engineering and design and then you go to financing partners, they appreciate that their risk is now lower because the engineering's been done to a much greater extent. And also the tolerance around those capital and OPEX numbers is a lot tighter than what you get for a DFS. So that's the first reason. The second reason, which I think is a bit more important, is we've had a corporate strategy for some time of trying to ensure that we are as flexible and patient as we possibly can be so that we can optimally execute our long-term contracts for the uranium market as we're reading it. And, it's changed a lot, particularly in the time that we've been talking. And it's still changing and it's still quite dynamic. By having the cash balance and a technical program that enables us to keep moving this engineering forward, we don't feel like we're starting to get backed into a corner or become impatient to jump at whatever's offered to us by the market at the moment. We can be a bit more patient and we can time the market as best as we think the market can be timed. And we can do that without then losing time at the back end. So the project doesn't stall, the numbers don't go out of date, our people don't get bored, and it means that the final delivery date, we can keep moving towards that with the engineering in parallel with our own assessment of what's optimum from a marketing point of view. And it's interesting, you know, we've been at this project a long time. As I say, it was 2006 that we made the discovery. And it would be such a shame for investors and other stakeholders who've been patient over such a long period of time if we lost patience right at the end point, which is the point at which you crystallize the value of the uranium that goes into the profitability for the project. So we're at that point where we need to just maintain patience for a little bit longer, and that strategy with continuing with the engineering and some of the long lead items that we've invested into so far, that's what that strategy is driven at.
As far as I understand it, the goal here remains to be in production by 2027, right?
Yeah, full production during 2027.
Okay. And you know, that's something I've been thinking about, looking at some of the timeline, and you and I were just talking about, you know, how long you've been doing this and stuff like that. I understand that you want to improve the feasibility and efficiency of the project here, of course, but what I'm also thinking is how much more improvement would it need? And I mean, the company has existed for now, what, almost 20 years now, I believe. You completed the first DFS 12 years ago. Well, not you. You joined the company, I think, 8 years ago. But then it was optimized again in 2015, and then there was another one in 2022. And granted, the numbers are getting better. That's the point behind it all. But when are the numbers good enough to say, let's dig in the shovels and take some yellow cake out of the ground? Meaning that timeline that you're thinking, full production by 2027. How do I know it's for real this time?
Well, the project's shovel ready, so we could start construction effectively as soon as we make a final investment decision. And construction, you know, construction isn't necessarily hitting concrete. As you say, for some people, they hit final investment decision and then they're only into front-end engineering and design. But in simple terms, we can start construction immediately. It's a financing piece that we're working on at the moment, and that also has a close relationship with the market. So we're no longer trying to optimize. We feel like we've had plenty of time, as you point out, to optimize. This is more of the normal course engineering that's required between completing a DFS, completing front-end engineering and design, and actually starting the project, starting the construction of the project. So, for example, if we use the crushers as an example, one of the advantages with our project is it's heap leaching, so it doesn't need a grinding or a milling circuit. It just has the primary crushing, the secondary crushing, and the tertiary crushing, which takes these massive lumps of granite down into about between 5 and 6 millimeters of size. So you're talking something about that big, something like you might see in the bottom of a fish tank, for example. Now that can go straight onto the heap, whereas if you're doing tank leaching, depending on the mineralogy and the metallurgy, you might be grinding down into a very, very fine dust. So what we did, and this is normally done, as you say, after you've already got a financing solution, what we were able to do is we've now gone out to the vendors of those, the selected vendors of that equipment, and we've got prices from them. And we've got a committed price from them that we don't yet have to pay for. What we have paid for is we've paid for the detailed designs. So we've bought from them what we call vendor drawings for a very small proportion of the overall kit. And in return for that, it's almost like an option fee. In return for that, they've said, here's the committed price. You've got until this date in which you may take us up on that firm offer. And if it goes longer than that, they had to competitively tender on how the price would change. Or in this case, it was like an inflation escalator from the end point of the fixed price to give us more time to be able to lock in that favorable competitive pricing. Now, that's not something that happens every day in the week. This is a pretty inventive way to do it. And that's the experience of Gavin Chamberlain, our now CEO, former COO, and 30 years of experience building stuff and building mines in Southern Africa. So that's not really optimization. That's just getting more and more clear about exactly what you're going to build, who you're going to build it with, who's going to provide the equipment. And once we've now that we've secured those detailed vendor drawings of the crusher, we then hand that over to the engineering firms, and they now do the detailed design and basically all of the engineering that joins, for example, the primary crusher to the secondary crusher to the tertiary crusher, and all of the fine engineering that makes them work together. And that's a time-consuming process. It's not that expensive because it's just, people's time sitting down as draftspeople and engineers, but it does take a lot of time, and that's why we want to be doing that now ahead of our financing solution.
I do want to talk about, and eventually I do want to talk to Gavin, by the way, the new CEO here, and also why you sort of went through the restructuring there. But I'm looking at there's more steps before you get to what you were just talking about here, and specifically looking at the sensitivity table and what I previously wrote down about the $95 uranium. That's not like, and help me understand what this is like. Is it the spot price, or are we talking about you having contracts for the majority of the life of mine at $95 to make this build out worthwhile? And do you think it's reasonable to expect getting into that kind of contracts?
So it's a price assumption. In other words, you can put into your models, you can put a single price assumption. You can, as we do behind the scenes for internally, we model a whole contract portfolio, and then we stress test that against different spot price assumptions over time. But for the financing world, it's very accustomed to a single reference point. So a single point, which is, here's the average realized price over the life of mine. And as unrealistic as that is in practice, that's just seems to be what the financial community expects and is used to analyzing. Now, for us, we would have a combination of market-related contracts, potentially some fixed price escalated contracts. We would hold some material back to closer to delivery dates, which we can then trade or potentially even sell into spot if we really like the spot market at that time. So there's a variety of different ways where we would expect to be able to achieve a number like 95. The term contract market's not quite trading there yet, although if you have more optimistic price expectations about what spot's going to be trading at over the medium term, then you can be writing contracts at the moment with floors and ceilings that give plenty of exposure to an average $95 price. The market-related contracts that are being written in the sector at the moment have got ceilings, over $120 a pound. So that's why you can run different spot scenarios and still be pretty comfortable with the $95 realized spot price, realized commodity price that we put into the model.
What's an ideal contract for you in terms of, like, sort of for you personally, what's in your head in terms of exposure to spot versus fixed long-term pricing? What would that look like?
At the moment, it's market related. The long-term contract fixed price escalated is sitting at about $75 a pound. So I would much prefer the dynamics right now of what you see with let's say, $70 floor and $120 ceiling. I've got an optimistic view on uranium, so I think over the period of that contract, it's more likely to trade towards the ceiling rather than the floor. So if I was given the choice of those two, that's what I would take. But we believe that the contracting market's got further to heat and more tension to be gained. So what you would typically see is, as the spot price spends more time at higher levels and as the whole contracting dynamic improves from a seller's point of view, you'll see those base price or fixed price escalated reference points lift as well. And there'd be at some point, if it continues to improve over the next 18 months, for example, there'd be some point where you'd be saying, well, gee, let's just lock those in because it gives us fantastic downside protection. So, there's a number where we'd start to blend in base price escalated, still retaining market exposure.
What would it take? How much would it take for you to basically sell the entire production forward on a contract? Like if I came to you and said, Brandon, I have a new job. Engie has made a fatal mistake at putting me on the head of fuel buying for the Belgian nuclear power plants. I want your entire production for the next 15 years on a fixed price. How much money a pound would you want to charge me?
Yeah, it's very theoretical
Sure.
question. Um, that would be akin to basically selling the asset. So you'd say to yourself, well, why would we develop the asset for you to have a fixed amount of supply? So unless it could be developed, unless you could come to us with a price that had attractive upside for us, I don't think our equity holders would see the point in that deal.
Okay.
I mean, yeah, if Belgium was happy to put in $200, well, then we'd have to have a think about it. But you know what I mean? Like, it's the trick here is not just simply to build a mine. You know, that's obviously that's what we're preparing for, but creating supply is not our end game here. Creating shareholder value is the end game. And whilst a utility obviously wants a supply and they don't care too much about our shareholder value, that's where the responsibility stops with me.
That's a very fair point, that the value is not always only in the production. There's also perceived market value, and there's optionality, as we mentioned, with the price moving back and forth. Sure, good point. In the terms of creating shareholder value, you've also just gone through a bit of a board restructuring just last month, I believe it's when it went into action. You're now the executive chair too, so congratulations on the promotion, which I suppose it is. What's the reasoning behind the restructuring the board like that, and what do these new folks bring to the table here?
So there's three moving parts to the restructure, as you say. The first one is Ronnie Beaver, who had been our chairman for 15 years. With the grant of the mining license and our project now being fully permitted, he felt that after 15 years, and definitely thick and thin, that was a good opportunity for him to now hand over the reins. And 15 years is a good innings, particularly when 10 of those are a deep, dark bear market. So he saw that as a good opportunity and a good juncture to retire from the board. Now, what that enabled me to do was make room for Gavin Chamberlain as our CEO. We hired Gavin a bit over a year ago as Chief Operating Officer because we needed somebody who was an expert with deep experience at building mines and building uranium mines in particular. As some of your audience would know, my background is in commerce and law and economics. So I don't believe it's tenable to run a company that's entering into a mine building phase with that sort of background. You need somebody to run the company who builds mines, which is what Gavin has done. So 30 years of mine building experience. Most relevantly, he was a project director who built the Husab uranium mine, which is largest uranium mine in Africa, and at that point, the largest hard rock mineral development in Namibia. So he built that for about 5 years. So he's African-based, which is a huge advantage. He can get to our project in about 2 hours from where he lives in Cape Town. So there's a whole lot of reasons why it's just vastly better for the company and for our shareholders that someone with Gavin's credibility and experience is in the operational CEO role. Now, happily for me, what that then means is I'm staying on. I'm still working full-time in the company as executive chairman. And so with Ronnie resigning, it made room for me to step into a role that I think probably is a bit better suited to my skill set and my experience. I've been chair of various organizations in the past, so that side of things is well within competence. And it means that I can be focused a lot more on both the strategic side of things, but also remain market focused, remain investor focused, and continue doing the aspects of my job that I'm perhaps a bit better at and better qualified for, and leave the aspects that Gavin's really good at to him to do. So it's really a win-win. Certainly personally, it's great. I feel very energized about what we can do next, particularly having Gavin now holding all of those operational reins. And it's certainly a win-win for shareholders.
So you're not disappearing off our screens here. You're going to keep coming back talking about uranium.
I'll keep coming back to the barbecue for as long as you'll have me, Antonio.
You still have a fair bit of the reins in your hands, though. I mean, you're executive chair and MD now. maybe for the North American listeners, why do you need an MD and a CEO? MD being a managing director. I know it's an Australia thing, but talk to me more
Yeah,
about that.
thank you, because this can be really confusing. So, in America, you've got sort of president and CEO and sometimes chairman as well.
Mhm.
In Australia, the way it works is you've got a board and you've got a chair of the board. And that chair can either be a non-executive chair, which means it's the part-time chairperson who really only focuses on the governance of the board, or it can be an executive chair where executive means there's an employment relationship as well. And so in this case, I'm executive chair because I'm a full-time employee of the company and I'm also chair. One of the governance things that we introduced to ensure that we still were able to claim best practice governance is what's called a lead independent director. So Alison Terry, who joined our board a bit over a year ago, she's been given the role, or accepted the role as lead independent director, which basically means she has governance oversight over what I do. So, even right down to things like someone still has to sign off my expense claims, and that goes to Alison, for example. So it's a really good balance. And now the MD aspect is a bit of a quirk of the ASX listing rules. Somebody has to put their name against the managing director for the purpose of the listing rules. And because Gavin is CEO, he doesn't sit on the board. We want him to be entirely focused on building the company and running the company from Africa. So he hasn't joined the board. And so therefore, I'm the person who the MD label attaches to. It doesn't really involve any more responsibility. There's a couple of regulatory aspects that only an MD can perform to do with announcements and so on. But essentially, the MD is a footnote to the executive chair role.
Sure. Fair point. Thank you for the explanation there. You mentioned your expense claims, and that makes me think about G&A. As I calculated it, give or take, again, rough numbers, 5 million a year last year, including staff on site. So it's not only, it's not corporate G&A alone. Is that sort of what you're targeting here again, or like how does this restructuring going to affect your expenses?
Well, the restructuring on a net basis, I suppose, saves us money because there's been no change to my terms and conditions, but Ronnie Beaver has retired. So there's one less mouth to feed, so to speak, at a board level. Our approach generally on G&A is most of the G&A goes into people and people who are playing an active role in moving the project forward. So if we take Werner Evolt, for example, so Werner is our managing director in country. He's also leading our owners team, which is a group of consultants in country in Namibia. Most of what Werner does, we would otherwise have to pay a consultant to do at the moment. So yes, it pops up as G&A, but I feel like it's a very good investment in the project. And then what you get for free out of that is you get the fact that Werner's been with us for over a decade. He's incredibly loyal. He's well known in the local community and synonymous with Bannerman and all of the good stuff that we do. And, we've got to remember Namibia is still a small country and Swakopmund's still a small town. The local people see people, they don't really see corporate entities in the way that you and I would be used to it in Belgium or Australia, for example. So having Werner there who knows everybody, who was mining manager at Rossing before Bannerman, so always been senior executive in the industry, it's really important for the way that we're regarded and how well we're trusted by the local community.
Yeah, fair point. What I'm getting to with all these questions about the board is basically that it looks like you're basically fully committed to building this thing on your own. Like you're the one who'll be bringing the Tango project into production. And is that the case? I mean, you can talk to me about that. Do you want to bring it into production as opposed to there being M&E with the operators of, what is it, Rossing, Husab, Langer Heinrich? Yeah, how do you see that?
Yeah, we'd love to bring it into production. It's, as I said to you before, our strategy is not production at all cost. It has to make sense for shareholders. But we're seeing a market where this asset looks fantastic. We're seeing a market where the expansion of this asset is viable and very attractive. And at $80 a pound, that price assumption The NPV, for example, it's 435 million US post-tax for a Tango 8, but we bring the expansion on and it jumps to 615 million at $80, and then you put in the 95 or you put in a price assumption above that, and the NPV grows exponentially. So this is a great asset to build with what we see coming at us from the uranium market, not only in a short-term spike, but over the longer term. All of those demand signals are fantastic. We're not seeing the supply response that the utilities would want. And we do see that this is going to be a highly supportive uranium market into the medium to long term. And we're making the appointments that enable us to do that. Obviously I've talked about Gavin, but Olga Skulyakova has joined us now. She's VP Market Strategy. She's got all of the relationships with the utilities to be able to write those contracts when we're ready and when the market's ready for us. We've got a good quality board. We're growing the enterprise value of the company, the institutional base of the company. So all of that's done with the intent of being in a position to build the project. And as long as we get all of that right, and as long as we manage the execution risk that comes with any project build, that's looking to be a fantastic result for shareholders.
I think I've seen Olya in an interview, and she doesn't look like someone you want to mess with. So good point there. It's that's not
actually a lovely lady.
Yeah, but
she's
still
incredibly popular in the sector. But she's a nuclear professional. She's super smart. She's super astute. I wouldn't mess with her, but then again, we're friends, so that's easy.
It's and those are not the only conversations that you've initiated. Those are not the only appointments, if you will, that you're making. Because I'm also looking at sort of stirring the pot, if you will, on the funding side, or looking for funding, at least, as in appointing Azure and Vermillon to help you strategize around it, if you will. It's nothing final, but you're moving in that direction. When do you expect to be more specific about this? When can you have more specific news around financing?
Yeah, so for everyone out there, we appointed Azure and Vermilion towards the end of last year, with a strategic financing process, as you note. With the grant of the mining license right at the end of last year, that enabled us to kick that process off. The rationale behind that approach is that we want to test whether industry money gives us a better result for shareholders than a more conventional project financing approach. So conventional financing, think of copper or gold or something else that's fairly conventional. You're looking at, say, 60%, maybe 70% debt. The balance either has to come from straight equity from shareholders or some sort of mezzanine. We did a lot of work on that a few years ago. We did all of the internal work that we'd need to do with independent expert reports, ESG, third-party experts, corporate structure. There's a lot of long lead items based on your internal work that needs to be done to be financing ready. And we made sure we did that while we had the time to do it. We've got a good idea of what that looks like. We've got a very good idea of how to model the impact on shareholders of a conventional project financing. And now we've got the opportunity and the time, as I said before, and the patience to be able to test, well, we're seeing a lot of tension about supply in the uranium and nuclear sector. Is industry money going to give us some options that are more attractive for shareholders? And it's relatively early in that process. So, we aren't trying to corral the different parties into making bids or offers at this point. We figure that the market's actually doing a lot of the work for us right now with that tension building, with nuclear becoming a lot more accepted as a clean energy source, with uranium now being broadly accepted as a future-facing mineral, for example. Utilities realizing that they can't just go out on an RFQ and get everything that they need. All of those developments in the sector and outside the sector benefit the breadth of choices we expect to have from this process.
So in terms of timeline, when do you think you can get more specific about those terms? Is that H1 2025, or is it even later than that?
No, I mean, we'd expect the process to be concluded this year.
Okay. So specific financing terms as to how much debt, how much equity you say by the end of this year?
Yeah, and there's scenarios where we wouldn't even need equity. That's the beauty of an industry financing. We're dealing with parties who have got enormous balance sheets, who've got a very low cost of capital, and we've got something that they really want, which is large scale production and the potential to expand that production over time. So there's some of the questions that we're asking of our future partners. So, you know, some of the transaction structures that we would contemplate as a result of this process wouldn't require us to go back to shareholders for equity, for example. And so you compare where that could be beneficial versus the more conventional project finance that I talked about. You can kind of get a sense for why we're prioritizing this process first.
But you had $35 million in cash at the beginning of this year. If and this is a big if, of course, but if you don't need to finance through equity, does that mean you practically never go back to the market anymore? I mean, is that the goal here?
Well, we're pretty open-minded on what the goal is, because there's lots of different ways to skin a cat. But you're right. I mean, there's a lot of runway in that. Those G&A and exploration and expenditure numbers that you quoted before, there's some lumpy numbers in that as well. So if we weren't to start investing any long lead items, then that 35 million, that gives us literally years of runway.
Okay.
So it gives us a lot of flexibility and capacity to be patient, which is really what the corporate strategy's been about for some time.
But so H2 this year financing, what then? I mean, when that's taken care of, what are paperwork do you need to have in check in terms of permitting or anything else before you can actually start digging? Before you can actually start building, before you can start digging, yeah.
Yeah, so it's fully permitted. So we've got all of the permits, that's environmental, heritage, mining license, all of the permits that we would require to be able to construct and then operate the mine. And that puts us in a really unique position. I think most people watching this show wouldn't know that, geez, the permitting is the big risk factor in uranium mining. It can be a huge headache. It can be an enormous challenge from a timing perspective and a delay perspective. So, you know, we're in rarefied air for the fact that we are fully permitted. So that's great. We've talked about the engineering. So we're already ahead of the level of engineering that you would expect at a final investment decision. We've got the tender responses from various parties to simply, you know, once we've got money, to just award those tenders and get them started. So other than the money, this is truly a shovel-ready project in every respect.
Okay. And when that's done, you basically start ordering equipment. How would that work actually? What's sort of the first thing that you have to order? Do you start with the securing the asset supply for the next couple of years to come, given that that's now been a problem? Like, what's the first phone call you make?
First phone calls to the bigger equipment manufacturers, just to make sure that we're locked in on their production timeframes. We've got a real advantage. Remember, I said that we've only got crushing. We don't need milling or grinding. That's an advantage, because at this size, which is big but still moderate, the crushing equipment's effectively off the shelf. It's very common at these sizes. We've been very careful not to have anything that's too unusual or too funky or unconventional. That gives us the greatest range. So, you know, using another analogy, we're wearing suits that are off the rack that maybe we just have to have the trousers taken up. We don't need to walk in and get anything tailored here. And, you know, that's obviously a calculated approach, but it also comes from the benefit of being heap leaching, which is predominantly about earthworks. That's predominantly about getting people in to make the heap leaching pads. They're not manufactured. There's a lot of expertise in South Africa just across the border that enables us to do that. So the first phone calls that we make is the key equipment vendors, and just make sure that we're locked in. To the extent that they don't already carry that stock, we want to be locked in on their production timeframes.
Any idea? This is not important, but just sort of wondering. But any idea as to who that might be? Like, is it CAT? Is it someone else? One of the bigger manufacturers?
Yeah. So most of the contracts have gone to adjudication. And that's a question for Gavin as to exactly who they are. I mean, it's names that we'd recognise, but I haven't tried to memorise exactly who's providing what.
Fair point. But why I'm bringing up acid is because I just recently interviewed Ben Feingold, who specializes sort of in Kazakhstan and the acid issues there, and it's a real thing, right? It's a real challenge right now, and so if you have that final investment package by 2024, that essentially gives you 2025 and 2026 to secure acid as well. Do you think that might prove a challenge here?
No, it's not something that's stressing us out. We've done a lot of work on it, believe me. And a couple of real distinctions with Kazakhstan. So the biggest distinction is the seaboard that we've got in Namibia and Whalefish Bay Deepwater Port, which is 70 kilometers by road from our project. Been bringing in acid, both importing and exporting acid for 45 years at least, as long as Rossing's been there. There is domestic acid production in Namibia. There's excess acid being produced across the border in Zambia. There's plans for a big smelter just across the border in South Africa that will have to dispose of it or sell its acid or transport its acid. So that just always gives us a lot of options. The smelter in Namibia, they're looking to expand, and part of their expansion discussion is what to do with the acid, because it's not really a viable business model for them to sell the acid overseas. And so we've got an MOU with them because of that. So there's already a symbiotic benefit between us and them with their expansion, and we can complement that and enhance that through seaborne acid trading. In our DFS, we included 10 million US as an allowance in our capital cost for establishing a facility at the Whalefish Bay port, which we've now secured. So that gives us not only the capacity to import the acid, but also a bulk handling and trading facility. That means that we can optimize and risk mitigate that over the longer term. And you can enter into long-term acid contracts. You can enter into long-term shipping contracts. There's a number of very big multinational acid and bulk suppliers that operate already in Namibia. It's the advantage of having a pretty well-established mining sector there already.
Does that mean that you should pay closer attention to your relationship with the Chinese, or is it not dependent on that at all?
No, it's not. The CGN who operate the Husab uranium mine, that's the one that Gavin built. They've got an acid plant. So rather than importing acid, which is what we plan to do, they import sulfur and then burn it into sulfuric acid. It doesn't really make sense to try and join with them on that. We'd rather just be bringing the acid in. It's not like these mines are right next to each other. They're 25 kilometers away down the road. So if we're going to ship it from them, we might as well ship it from the port and be in total control. Langer Heinrich doesn't use acid in its processing. They use bicarbonate.
Right.
And in Rossing, which is owned by the Chinese giant CNNC, being the third of the operating uranium mines, they have a facility at the port where they import acid. And basically, the more acid that's coming in and out of the country, the better the choices that the mining sector's got.
Right. Okay. I think Namibia is one of those places where the desert meets the ocean, right?
Correct. Yeah.
Okay. I think I saw that I didn't know that off the top of my head. I think I saw it on Twitter recently, so that's where I'm coming from.
But quite
fair
literally,
point.
see the dunes literally come down, and there's a little road there, and then you've got the beach. It's spectacular. It's a beautiful country.
Yeah, that's exactly the picture I'm thinking about. I saw it just saw it somewhere like yesterday, the day before that. So it is a good picture that I've seen. And then people are just walking on like a camels or something that I don't know what, might be horses. I don't know what it is, but it's that's what they're walking. And so interesting. Good. Well, I think this has been a good overview so far. I made a note that I wanted to ask you about your investment in Namibia Critical Metals. So last year, you made a further investment. You're now at over 40% ownership of that company. It's a public company. I think it's Canada listed. What's the plan there?
What it was originally designed to do is give us greater strategic relevance in Namibia. So Namibia Critical Metals is the owner of the Loftel heavy rare earth deposit in Namibia. It's a fairly unique deposit in the Western world anyway. It's one of only 2 advanced xenotime, which is a heavy rare earth mineral, deposits in the Western world. And whilst it's not an enormous deposit, it's still quite substantial. So we go from having one project of national significance to having a strategic shareholding in a second project of national significance in Namibia, which quite frankly, we really didn't pay very much for. There was a local Namibian shareholder who I knew personally who just wanted out, and we provided that exit for that individual and his group of companies. Now, the nice thing about it is it's fully funded by JOGMEC, which is the Japanese governmental body that basically funds exploration and development programs for the future benefit, hopefully, of Japanese industry. And this is capable of providing the dysprosium and terbium requirements for 85% of current Japanese industrial demand. So it's literally a game changer for Japan. And anyone out there who follows REEs will know that sort of geopolitics and the tensions around the Chinese control of this sector loom large on a whole range of industrial applications that rely on these minerals. So it also gives us a fair bit of positive influence, I would think, in Japan as well.
Okay.
So it doesn't cost us very little. We did support their recent capital raising, but given that all of their in-country and joint venture expenses are paid for by JOGMEC, they've got a very low cash burn with just very modest G&A that's required to maintain the Canadian listing. So we've been a supportive shareholder for a couple of years. They've got a full management team in country, so it's no distraction for us. So it's a nice to have without being too much of a distraction, and it's not a big feature on our balance sheet either.
Okay, so you're not necessarily trying to be the energy fuels of Africa.
No, it's very different circumstance. I mean, I'd love to. It'd be fantastic to have a plant up and running where I could process REEs and vanadiums, but we're not in that shape.
Sure. So, but it's basically not a lot of your time. There's not a huge time involvement with the company here. No.
So Steve Hurley, our CFO, very experienced CFO with lots of international experience. He sits on NMI's Canadian board, and obviously provides our input when they ask for it. And otherwise, other than going to site once or twice a year, usually with a Japanese delegation, which is pretty interesting networking, it doesn't take up any of my time at all.
Right. As you said, a lot of your time goes into talking to investors. How much of your time goes into talking to European versus North American versus Australian investors versus sort of the rest of the world? Like, where's the main interest in the company here?
Yeah, interesting question. Look, I'm still finding my feet on what this new role is. Lot of interest coming out of US investors. I think the big thematic to follow in this sector is when the generalist investors get engaged. It's very minor at the moment. A lot of the conversations that I'll have with larger generalist investment funds are, yeah, we're looking at it. And then you finish the meeting and have a beer with the guy and you find out, well, on his PA account, he's punting uranium like crazy. But as a portfolio manager, he can't put it in his account yet, in his portfolio yet. Now that evolution will come, and we're seeing strong leading indicators from the level of interest and the nature of interest in the sector, and in us for that matter, coming out of the US. So what I'm hoping to do is use this extra time that I've now got with Gavin running the company to be able to pay more attention to that. Still, we're ASX, the majority of our investors and shareholders are ASX. I sit here in Perth, Western Australia. So inevitably, the majority of time is relating to ASX. Love to get feedback from your listeners, but what we think is effective is platforms such as what we're doing now with you, Antonio, with the CEO BBQ, and our own social media enables us to interact with European and North American retail investors. Hopefully that's very effective. Hopefully that gives investors and shareholders what they need. We're always available to communicate and answer questions with shareholders. And whenever we find out someone is a shareholder, we try and reach out to them and see if there's anything we can do. So as the world gets a lot smaller and as the power of sort of electronics and social media and email distribution mechanisms and so on improves, we feel like we can provide a pretty good level of service to shareholders outside of Australia. And that's what we're trying to do anyway. Hopefully it's working.
Yeah, fair point. I think thanks to a lot of people watch these things when so I announce all the interviews that I am going to be doing in the following week on resourcetalks.com, and then people send in questions. There's a fair bit of interest coming out of North America to my estimation as well. Have the news coming out of NextGen late last week sort of changed the way you get approached by investors or banks already, given the the potentially the slowdown of production over there, but then no slowdown on your end given where you are in the world? And if not, do you think it's gonna change in the future?
Yeah, look, there was a fair bit of anticipation within the industry of how tough that permitting is in Canada. So I don't know too many people who were taken by surprise with that announcement. How that permitting, how that path develops is always an interesting process, and this gives you a bit more color as to where it is in that permitting process that the authorities feel like they need to take stock. But we just know that any permitting process in uranium takes a lot of time. And there's a thing called the precautionary principle, which governs the way that any environmental permitting is done. And in a responsible country like Canada, the same as Australia, the same as Namibia, the precautionary principle says, if you're not sure, you need to stop and wait and find out more. You can't take chances with the environment. So anything where it hasn't been done before or it's not sure, it's just a process where the company needs to provide more information. And look, we went through all of that. It's just that we had the benefit of starting that in 2008. And in fact, I worked for Bannerman in 2009 and was responsible for delivering the environmental and social impact assessment and the environmental and social management plans. So I've seen firsthand in the African environment just how strenuous that process is. So when I see the great progress that NextGen has made with all of the approvals, it's not a surprise to anyone that sometimes it is 2 or 3 steps forward and then there is the 1 step back, and that's just permitting in uranium.
Fair point. Again, thank you for the overview. I think it's been a good overview. Final question: how much do you hate being asked about Niger when talking about Namibia?
Never been asked it in quite that way. Look, it never bothers me because it's a fair enough question, right? Like, I've lived in Africa for 5 years. I've worked in Africa for 15 years. I've always got to remind myself what's second nature to me is not second nature to other people. And that's an important reckoner when I'm explaining anything, but particularly African politics. So quite happy to distinguish the two. First of all, it's a little bit like comparing Central America with North America or South America with North America. Yes, they're in the same continent, but they're 4,500 kilometers away or 3,000 miles away. The whole Sahel region is a different religion. It's a different language. It's a different colonial history. They're very different people. And what I found really interesting is when all of this was happening in Niger and the coup was taking place, and there was a lot of contagion into Burkina Faso and Guinea and so on, I was very interested to track what the Namibians would think of that, how prominent it would be in Namibian media, for example. And quite frankly, there was less in the Namibian media than there was in the British media, for example, following BBC. And that's simply because, they're not so interested in what's happening in West Africa and North Africa. It's been volatile for a very long time, and the Namibians they march to a different drum. So it is very different in so many respects. But probably the best example of how different Namibia is from, say, Niger or any of the Sahel region states, or any of the West African states, for example. It is the youngest democracy in Africa. It's the last of the African states to achieve independence, which was in 1990, 34 years ago. And in February, tragically, the sitting president of Namibia, Dr. Hage Geingob, he actually passed in office. He passed away quite suddenly. The country was shocked. It was, deeply bereaved by the incident. But what didn't happen is there was no chaos, there was no violence, there was not even any political posturing. What happened is the constitutional process just went step, step, step. And even the opposition party didn't seek to take advantage of it. And I can't say that that would happen in Australia. It was an incredibly respectful process, which actually led to a huge amount of unity within the country. And the vice president who stepped into presidency as per the constitution, the first thing he did is he said, I will not be contesting the next election as president. All of the systems and all of the the SWAPO party decisions that have been made to date all stand. And the intended candidate for the SWAPO party to contest the presidency later this year, she will still be put forward. And so she stepped into vice president position as the SWAPO party constitution requires, and everything went smoothly. That's a huge endorsement for any country, particularly a young democracy that's never been tested in that way. And so I think that's a really tangible example of how different things are in Namibia versus large proportions of Africa, but large proportions of a lot of the world. You can point to a number of developed countries that wouldn't have handled that situation with anything like as much grace as Namibia did.
There's I was just trying to look it up to see sort of the spatial difference between Namibia and Niger, and it's basically the in terms of kilometers is about as far away from each other as Berlin and Astana are. Astana is the capital city of Kazakhstan. So it's Germany to Kazakhstan. For Europeans, that makes a whole lot more sense when you think about it that way. Maps not always the best thing because they're on a globe. Doesn't whatever everybody knows that. So yeah. But it was I mostly intended it as a joke. But thank you for that extensive answer. Always a pleasure to catch up, Brandon. Thank you for investing your time in me, and hopefully speak sooner than a year from now.
Yeah, great. And love what you're doing with the channel, Antonio. I feel like I'm in some really esteemed company with a lot of the interviews you've been doing. You're hitting the ball out of the park and absolutely nailing it. So keep up the great work. There's a whole lot of investors out there who absolutely love what you're doing.
Thank you for the very kind words. Yeah, I really appreciate it.